There's a lot of information in there. And certainly when we look at the details, consumers were a little less optimistic about employment and business conditions right now. They also complained about their finances not being as strong currently. Also, looking ahead, consumers were pretty unhappy about employment, business, and income, and their financial situations. Their expected financial situations were also a little bit worse. So we're still kind of just moving back and forth in the data. But I think some key things in the write-in suggest that consumers are a little less concerned about food and energy prices. And certainly we're showing that the expectations gauge continues to decline. So that's all good news on the inflation front. But they are more concerned about jobs going forward, and they're also more concerned about the political climate. And so we'll be watching not only the inflation gauges, but also the jobs gauges within this. Because if consumers get the whiff that more layoffs are coming, then they'll pull back on spending, and that'll contribute to slower growth over the course of this year.
What are they still spending on, and what have they now avoided?
Well, consumers are definitely still spending on services. We see that in retail sales. We see that in the consumer spending data that the BEA puts out. But when it comes to goods, they are starting to pull back on things that require financing. So homes, cars, big ticket appliances, and that's because interest rates are high. And indeed, in today's report, consumers said that they don't expect interest rates to continue falling. They think interest rates might actually tick up. So that's pretty material when it comes to their buying attitudes for goods. But certainly when it comes to vacations, we did see a little bit of a pullback in expectations about going on vacations, but that's just one aspect of services. And we're really going to need to see the PCE data this Friday to see about whether services consumption is still pretty robust in the United States.
Talk to us about the labor market and how that impacts consumer confidence. I would think that would be a big one, because it seems like everybody who's got a job has a job and wages are going higher, so that's got to be helpful.
Yes, I mean, when we look at payrolls, we saw really shockingly, surprisingly strong numbers in January and December. And it wasn't just kind of your big three driving things. The big three are leisure and hospitality, government, and also healthcare and social assistance. You saw gains across the board, and you also saw an uptick in temporary employment for the first time in a little over a year. So those data are pretty good, but we need to continue to see improvement in the labor market, or in terms of the gains being more broadly based, or else we're going to see weakness ahead. Indeed, you still do have some industries that are letting people go, certainly finance, tech, transportation, and warehousing. We don't think that's really going to improve. Also, residential construction's probably not going to improve until interest rates start to fall more materially. So we're definitely watching the labor market. We think there will be weakness in the U.S. economy, slowing down probably around 0%, between 1% and 0%. A little bit of an uptick in the unemployment rate before the end of this year to 4.3%. But then we'll see things get better towards the end of the year, certainly as the Fed we think will have begun cutting interest rates probably starting around June, and then we'll cut interest rates further next year.
So they're looking at sort of prices, everyday prices, to sort of give them a read on inflation. They're looking at their job status to feel good about that. What other factors do they wind up looking for? Like, is it, I'm going to go buy a car and I don't like a 5% interest rate? Is it the mortgage rate? Is it the stock market? I know that the stock market's not the economy, but if you have a 401k, you've probably been pretty happy with what has come through in the last year.
I think consumers are looking at all of that. And certainly we've seen that consumers have continued to spend. But some of that spending is deficit spending. They're using credit cards. So that means that, their real incomes are probably not rising as much, and certainly is below the real spending that we've seen. And this isn't really sustainable. But again, as many consumers are working, they still feel confident that they can put expenditures on the credit card and they'll be able to pay it off. But the thing is that if you fall behind, and we are seeing delinquencies rise, the cost of that credit has skyrocketed. And indeed, when you look at the amount of interest that people are paying in the PCE data on debt, it's skyrocketed, along with the amount of consumer credit card debt that's piling up.
In terms of future expectations, the Conference Board expectations came in at 79.8 last month versus last month, which was revised down to 81.5. Where would you like to see that? Where would economists like to see that number?
Well, I mean, the thing is that people always say economists are dismal scientists, but really we are optimistic. And, you know, anything above the 80 threshold signals that consumers think the economy is going to continue to expand. And that's always a hope among economists. But, you know, this measure has been over and above 80 over the last few months. And certainly the uptick in the percentage saying that they think a recession might be on the horizon is disconcerting. So we want to continue to watch the data and see how consumers feel in line with the real data that gets pumped out by the government. So certainly we want to see better growth, but we see tremendous risks to the downside.
All right, Dana, thanks so much for joining us. Dana Peterson, Chief Economist at the Conference Board. Alex, got to go back to this story on the cruise ship.
I owe Abigail an
we
apology.
need to do some more reporting on this.
Yeah.
And what do we find?
Well, apparently they actually were worried about cholera. It turned out to be a stomach bug.
Okay.
But because of the nausea and the diarrhea and the vomiting, they were worried it was a cholera outbreak. So, Abigail Doolittle, you were somewhat right
Yes.
In that.
But it goes to her theory, which a lot of people hold, is I don't want to be on a cruise ship with all these people. I mean, it's like a petri dish for any kind of cold, sniffle, flu, whatever,
well, sure.
or something worse.
We say sitting like 2 feet away from each other. But then, again, I had a friend who just went on a cruise to the Caribbean. You know, 3 people, two of the Wilson Phillips crew came on a surprise song night, entertainment night. That is cool.
That is cool. And
Vanessa Williams came, did a drop-in. I mean,
wow.
That got me. The Wilson Phillips thing got me for sure.
Exactly. Well, Charlie Pellet is he's a diehard cruiser.
And he's figured out a way where they pay him.
Yes, of course he did.
Okay, but he also goes to like oil rigs for fun. And he also goes on like the scariest runway ever and like wants to have a plane.
Oh, yeah, no, that's an upcoming trip to Nepal,
yeah.
where you land on a mountaintop and the runway actually goes up a hill.
So I don't think I'm going to take that recommendation from Charlie Pellet. I'm just saying. But Abigail, we do apologize. They were worried about cholera. It turned out to just be a tummy bug. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with this Bloomberg Business Flash. Right now, the major averages, they are mixed in the S&P 500. We'll start there. 5 of the 11 major industry groups, they are higher. Utilities are in the lead. The biggest drag, that's coming from energy right now. 276 stocks are higher, and about 220 are lower right now in the index. Consumer confidence falling in February for the first time in 4 months. The Boeing 737 MAX crisis hammered factory orders for durable goods. The January durable goods orders dropping 6.1%. That's actually the most in about 4 years. The commercial aircraft orders plunged. And right now we have treasuries mixed ahead of a, don't yawn, $42 billion auction of 7-year notes. The S&P 500, 2 points higher, 5,072 right now, the index. The Dow Jones Industrial Average down 112 points. The NASDAQ 100, 46 points higher. That's up 0.25%. I was looking for a theme, and Alex said, why don't you just say there are more buyers than sellers, or more sellers than buyers?
To be fair, I didn't say that. I said my favorite is when people say that because it's funny.
Well, it's also true, and it doesn't really.
It also is true. It doesn't tell you anything.
much.
But I am excited about this auction. You're bored, apparently, from what I'm.
Well, here's the thing. Mark, our intrepid producer, will drop the auction results, the headlines, in the chat, as if I have any idea what it means.
Right. Well, I'm not saying I know what it means. I'm just saying I'm interested in what it means.
What do they say? There's a red headline that it's the bid to cover ratio.
Yes.
So maybe I don't know. Ira
That's why we have people like Ira Jersey on the payroll.
Okay, Ira. He joins us. Look at this. Ira Jersey. He is a Bloomberg Intelligence chief U.S. interest rate strategist. So I care because yesterday we had the 2, we had the 5. We had record corporate bond sales, and we had a pretty solid takedown. I mean, there's a lot of supply overnight. We had a really strong demand for some French issuance. Come on, buyers are there.
Yeah, I think given where yields are and just the idea that, we are getting a bunch of mixed data, that there are some people dipping in their toes. And keep in mind, going into the most recent sell-off, it seemed like the market was positioned a little bit on the short side. So if nothing else, you're going to wind up continuing to see some short covering. Talking about the auctions, the two things that we look at very closely in the auctions is that bid to cover ratio. If it's basically at or near where it has been historically, that's actually a pretty good sign because these auction sizes are much larger. So that means that you still have bidders who don't have to come in and bid. So these are bidders that aren't just the primary dealers that are coming in and looking to buy some bonds. And you saw that a tick up in the bid to cover ratios in some of the auctions in the last couple of weeks. So that's number one. Number two is indirect bidders. So indirect bidders are people who go to dealers, put in their orders, and they're end users. So those are hedge funds, pension funds, investment managers, mutual funds, and the like. And so that is the end user demand, and the higher that is, the better. So again, we look at the trends in that. So those are the two things: bid to cover and indirect bidders. Those are the ones you want to key in on.
See,
I learned something there.
He cares. Yeah, John Tucker, bid to cover ratio.
That's what I said.
That's what he's been doing this 30 years. He's learned one term, bid to cover ratio. All right, so is the market also positioned, Ira, for kind of a hot inflation data point on Friday?
Yeah. Well, so the data that we're going to get this week is the PCE deflator, and obviously that's the Fed's primary gauge that they look at and that they want to try and target when they talk about inflation. I think that the market is expecting somewhat of a better number or higher number than we had in the recent trend, and it does broadly follow CPI. There's different weights, but generally speaking, whatever CPI does, usually PCE does that, at least directionally does the same thing, maybe higher or lower magnitude, but usually the same. So I think investors are currently expecting, inflation not to be coming down as quickly as it had been last year, and that's one of the reasons why we have 10-year yields at 4.25% instead of under 4. Right.
And then
that was one of the big reasons for that.
And then hence like the short positioning, and then now the short covering. So are we going to come in more clean in terms of positioning for the PCE?
Yeah, it seems that way. That I still think that people are leaning at least a little bit on the short side. There were a lot of people who were long the front end of the curve and short the long end. So you had people in what we call yield curve steepeners. So people who thought that short-term interest rates were going to go down more quickly. That's really been the big unwind. It's been the unwind of this curve trade that has driven things significantly. So we talk about 10-year yield at 4.25%. Look what the 2-year yield has done, right? You have all the way from just over 4% all the way up to 4.70, which implies that the market's thinking the Fed's only going to cut 6 times over the next 18 months or so. So that's pretty impressive that we've come back and basically priced out 2 full rate cuts over the next year and a half. And I think that that's a very telling positioning shift that we've had in terms of the curve. So I think, yes, people are leaning short, but also curve positioning is probably much cleaner now than it was before, which is the reason you saw a semi-decent 2-year auction yesterday.
So the 10-year Treasury, Ira, is about 4.28% today. Where do you think this is towards year-end?
So year-end, we still think that we're going to see a pretty significant rally in the Treasury market. So that means price up, yields down, so we do think that we're going to see somewhere south of 3.5%. Over the next 9 months or so, and the primary reason for that is that over time we do think that the economy is going to slow. You are going to get rate cuts, priced into the market and the Federal Reserve actually acting on that. It doesn't seem like it now, but over the course of the year, there are some cracks in the economy. They just haven't manifested themselves yet in some of the hard data. But you look at even the consumer confidence numbers that we just got a couple of minutes ago, and that was a pretty big downshift, both in the current expectations and the headline number. So that doesn't mean that people are going to stop spending tomorrow, but it does suggest that if we continue to have slightly better or higher inflation prints, and you have people who are worried about the political angst, and you also don't have people getting the raises that they were getting over the last couple of years, that all of those things can contribute to a slowdown in spending, lower inflation, and therefore interest rate cuts, and that's why long-term Treasury yields could rally a bit by the end of the year.
So Ira, I'm looking at a chart, not normalized, of the 2-year yield and the S&P, and I know you're the bond guy, but the peak that we saw in yields for the 2-year back in October, marked sort of the interim bottom for the S&P and sort of ignited that bull run that we've seen since then, where the S&P is up 23%. If we keep grinding higher here on yields, like at some point, that's got to wind up denting the equity market, no?
Yeah, I would think that the way that risk assets have been acting recently is that if the Federal Reserve is not cutting interest rates, then valuations are much too high, right? So that's what you saw back September, October, when you wound up having us actually pricing in the potential and serious potential of hikes this year or over the course of the 18 months following that, and that I think was really driving some of the equity valuations and the fall thereof. I think the question is now, and this is where the uncertainty about what's going on in the economy really comes into play and into how you position your portfolios, is that if the economy is good, and that's the reason why we have interest rates that are relatively high, that's not necessarily bad for equities. That doesn't mean that equity markets necessarily can go up or need to go up, but it doesn't necessarily mean that they need to fall either, because if you continue to have good top-line growth, you can hold your profitability where it is, then then it becomes a valuation story, not a fundamental story for, I think, companies more broadly. So I think interest rates are there will be shifts in how the different markets react to each other, where that negative correlation you saw back in October might actually turn positive and be positive over the next 6 to 9 months.
All right, Ira, thank you so much. We appreciate that. Ira Jersey, Chief U.S. Interest Rate Strategist, Bloomberg Intelligence, dialing in from our Princeton studio. Alex, interesting story I saw in the Journal today. Hotel staff shortages threaten to push travel costs even higher. Hotel owners have been on an epic hiring spree, yet even after clawing back hundreds of thousands of jobs during the past 2 years, the industry is still light on staff and often struggling to adapt. Here's the one that gets me. Daily housekeeping for all guests, room service, and other amenities that were reduced or eliminated during the pandemic are still lacking in many properties.
Oh, yeah. So, I mean...
That's a big deal to me. I was shocked, when you come back to your room and it's still like the way you left it.
So when I went to Florence for work,
yes,
no one did my room.
Really?
When my husband and child and I were in France over the summer. We were down in the south of France at one point. No one came in our room.
Oh,
and we
let
even
me
like
get out the
requested.
world's smallest violin right
I'm not
now.
complaining. I'm just making the point. And like I didn't even feel bad because it was literally like, a woman and her boyfriend like cleaning these rooms, right? And it was really busy. It was like, okay, fine, we can live with sand on our floor. But to your point,
I know.
that's a big deal.
And at the same time, hotels
Not for
across
John
the U.S.
Tucker,
At the same time, hotels across the U.S. have held their daily room rates near all-time highs this winter, in part to offset increases in wages to lure back workers. Hotels will collectively pay $123 billion in compensation this year. That's up more than 20% from 2019, according to the American Hotel and Lodging Association. I found that the good brands where I go, John, I'm getting my housekeeping just every day. It's just a given.
I don't get hotels. They don't put me up.
None of this surprises me at all.
I sleep in the
for
back
John
of my
Tucker.
car with Michael Barr.
Well, that's upsetting. Well,
Yeah.
maybe it's an RV. I don't know. That could be fun. Michael Barr and John Tucker in an RV road trip.
Oh my God! Yeah, there's a vision. And no Airbnb for me. I'm not.
I know you're not an Airbnb guy.
person. So.
I was talking to somebody who is flying somewhere but going through Turkey, and I guess Turkish Airlines, I think she said, is giving 5 free days in a hotel to try and spur tourism in the country.
Yeah. All right. Well, I've heard. Well, I don't know. I haven't been to Turkey, so I'll reserve judgment. But
Clearly, that's where clearly they got the staff.
They got it. They figured it out. All right. Looking at the markets here real quick. S&P unchanged. Dow off 0.3%, and the Nasdaq up 0.25%. With our news in New York City, here's Michael Barr.
I don't know how to follow that. Paul, Alex, John,
can't.
thank you very much. President Biden, he's meeting with congressional leaders at the White House today to discuss legislation to keep the federal government operating, as well as aid packages to Ukraine and Israel. Meanwhile, in New York yesterday, during a surprise visit to a late-night TV talk show, President Biden talked about the war between Israel and Hamas. Biden on NBC's Late Night with Seth Meyers detailed some of his discussions to get a ceasefire.
And if we've got at least a principle agreement, there'll be a ceasefire while that takes place. Ramadan's coming up, and there's been an agreement by the Israelis that they would not engage in activities.
Biden called on Israel to consider how the world regards the treatment of innocent Palestinian lives. A black member of Congress is talking about Donald Trump, saying that his multiple criminal indictments have boosted his support among African American voters. The former president also joked about being able to see black people in a room with bright lights on stage Friday. Republican Congressman Byron Donalds defended Trump's remarks.
I was on the stage when he said it. Everybody in the room was laughing. He was joking. It's allowed to. It's okay to crack a joke and be sarcastic.
Congressman Donalds told ABC most of the comments by the former president that night were talking about healing the country. The DEA is cracking down on the use of pill presses in its efforts to fight the fentanyl crisis. It warns e-commerce sites to regulate purchases of presses under current law. In the duplex-turned-drug lab in New York City, DEA Administrator Ann Milgram says agents seized presses along with 200,000 suspected fentanyl pills.
In the last 6 months, we've seized pill presses in New York, in Massachusetts, in Mississippi, in Kentucky. It's an industrial machine.
Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg.
news, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major stock averages, sounds like yesterday too, mixed to little changed. Best performing stock, let's start there. After their earnings, Norwegian Cruise Line Holdings up 14.4%, followed by Constellation Energy and Carnival Corporation. They're up close to 6% right now. U.S. consumer confidence falling in February for the first time in 4 months. Meantime, Joe Feldman at Telsey Advisory Group says, you know what, the retail earnings that we saw still suggest that the American consumer is holding up.
Even that low-income consumer, they generally have a job if they want one, and they've seen some wage growth. So that's why I think there's some comfort that the consumer can sustain some spending levels going forward into 2024.
You may not have heard of them. Viking Therapeutics, the shares doubling after results from a mid-stage trial suggest the biotech company may field a viable competitor to weight loss drugs from Eli Lilly and Novo Nordisk. Right now, the S&P 500 unchanged, 5,068. The Dow Jones Industrial Average down 153 points. The NASDAQ 100, 24 points higher. Now let's do yields for you. The 2-year, let's see, at 469. That is unchanged. 10-year yield. I'm looking for anything that's exciting here.
I got stuff.
What do you got?
I got oil.
Oh, oil.
Oil companies. Come on, man.
All right,
oil
Brent.
companies.
We'll do Brent, the international. Well, I'll do the commodity. Up 60 cents, 83.13 a barrel. NYMEX crude, West Texas. That's up right now about 0.8%, 78.23 a barrel. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. And that is your Bloomberg Business Flash. Paul and Alex.
Okay, so I will take it because it's oil. So let's get through it because Hess is down 3.25%. It's one of the worst performing stocks in the S&P. Chevron is also off by 2%. Here's the interesting reason why. So Chevron had a filing that came out late last night that said one of their risks about its takeover of Hess is actually the fact that Exxon and CNOOC, which are partners with Hess in Guyana, say they have the right of first refusal for Hess's portion of Guyana, which basically means that Exxon and CNOOC, which is a Chinese oil company, could bust up this merger between Chevron and Hess. So for nerds like me, this is cool.
That's big.
This is stuff that's happening. So for that, I turn to Fernando Valle. He's Bloomberg Intelligence Senior Oil and Gas Analyst. Fernando, when we think about these mergers, we think about, competing bids. We think about antitrust. We think about those things. We didn't think that this was going to happen.
Yeah, typically you don't see preemption rights on corporate takeovers. It's very rare. You saw it recently when Suncor acquired Total Energy's Canadian subsidiary, and there were some preemption rights there on ConocoPhillips acquiring 50% of Surmont. But typically you're acquiring the whole company, and the owner itself doesn't change, just the controller of it. So most joint operating agreements don't foresee for that to be a preemption right event.
So what does the contract say here? It's got to be cut and dry. If I'm Chevron and I'm buying Hess, I have to have a high level of confidence that I'm going to get the Hess stake in Guyana.
Well, all we can do is speculate because it's a private agreement, so we are not really privy to the details of that contract. Hess seemed to be very confident that they will be able to push this through, and there is no preemption rights. I would argue that Guyana is the most valuable asset in Hess's portfolio. I think most people would agree with that. And so, as Alex mentioned, if Guyana was excluded, then likely there's no deal for Chevron anyway. And so, I doubt that that we'll get clarity in the next few days. But Hess seems to be fairly confident there is no preemption rights in this case.
So, why is Chevron doing? Why is Exxon doing this?
Well, because it's the second best asset in the world.
So why doesn't it just buy Hess then?
Because they don't want to buy everything else that's included with Hess. They want to buy Guyana. And
so why didn't they do this before Chevron got into this?
Probably because Hess wouldn't want to sell just Guyana. And now Chevron has laid out the marker, the pricing marker for it. And if you can just find a way to just pull out the best asset out, why wouldn't you?
So this is an exercise for the lawyers here. Who's got the better lawyers? I mean, that's what it comes down to. Do we have any sense as to when we're going to get some visibility here?
Probably within the next a month or two, I would expect some visibility. It does tend to drag on. With Conoco, it took upwards of 2 months to see the actual preemption, and then to find over 6 months to get a new deal between Suncor and Total Energies. But I think probably within 2 months we'll get more clarity on this. It's really about the contract at this stage, and if they were negotiated at a suitable way for Hess and Chevron back when the joint operating agreement was signed.
How much of a bummer would this be for Mike Wirth at Chevron if this deal collapsed?
I mean, this would be huge. This is, as I said, the second best asset available for sale, and really that's the only block that has any production out of Guyana and any real potential as it stands. So if they lose out on that, is a big part of the growth opportunity for Chevron, and it puts Exxon in a whole new level because now they would own upwards of 60% of that asset and give them a lot of growth over the next decade. You don't spend $60 billion on Hess if you don't think that Guyana is a very, very attractive development over the next 10 to 15 years.
Yeah, and to your point, it's not like they can just go buy the next asset, right? Like it's not like they're vying for areas in the Permian where there's a ton of producers where maybe you could look at different acres somewhere else. Like this is kind of a make or break it moment. If the deal does go through, then what's the relationship between Chevron, Exxon, and CNOOC going to be like, since they all sort of are working in the same area, working together?
I mean, they work in a lot of projects together. They are in Tengiz, Chevroil, or in Kazakhstan. They are in Wheatstone in Australia. They've been partners for a long time, and I think there's no love lost there. There's always going to be a competition, and if you can exercise your rights, fair play to you. Obviously, they won't be totally happy with it, but I just can't foresee. You have to be fairly sanguine in this industry, and you have to move on to the next deal and to the next growth possibilities. So I'm sure it will be hurtful at first, but you've got to find ways to keep working together and do best for your shareholders.
That's awesome. Hurtful. It will be hurtful. Hey, just looking at the share price, Hess off over 3%, Chevron off by 2%. Are these legit reactions here?
Well, I think yes, in the aspect that, again, it's the second best asset after Pioneer, and if there's a movement where Exxon consolidates those two best assets, and it's really painful for Chevron. And then for Hess, if you sell just your best asset, you take the diamond out of the rest. The rest of the portfolio is a much harder sale.
All I know is if I'm Chevron, I'm turning to my lawyers and I'm saying, tell me we're covered here.
Yeah.
I mean, tell me this is not a risk. I can't imagine that this is even something that would be talked about. Is this something that happens in other deals?
Well, as I mentioned, it happened with Suncor buying Total Energies in Canada. It was a little bit different because the Surmont mine was only Conoco and Total, and Conoco managed to preempt that. I'll say that Suncor, in Suncor's release saying that they were acquiring Total, they noticed right away that could have been an issue in Surmont. So as opposed to Chevron did not say that as a risk in their initial filings.
Which is interesting, too, because if you take a look at some analyst notes out that also came out today, it's like, look, either way, it'll be fine. Let's just say it's going to take a lot longer for the deal then to get closed, which just makes everything a little bit more uncertain, the synergies, the development, et cetera. Fernando, thanks a lot. Always love talking to you. Great to see you. Fernando Valle, Bloomberg Intelligence, senior analyst for oil and gas. He's like my go-to guy.
Yeah, he knows what's happening. Global energy. He's our guy.
Global.
But again, I'd be looking at my high-priced attorney. I'd be like, dude.
Well, this is David Weston's joke all the time because he's a recovering lawyer, as he would say. And he's like, everything is good for lawyers. So, like, when President Trump was elected, he's like, this is good for lawyers. Whenever there's M&A, this is good for lawyers. It's like, it's all about the lawyers.
Yep. Everything's got to be papered over 1,000 times.
So, anyway, we're looking at S&P, as John Tucker loves to say, doing a whole lot of nothing. I'd like to say we're waiting for something exciting this week, but I don't know if that's actually true. You're seeing not a lot of puts. You're seeing not a lot of calls.
Oh, the PCE.
Yeah, I don't know. I can't get excited about that data all that way away. All right, this is Bloomberg.
company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with your company news. I'm going to put my sports hat on right now. You know, NFL valuations, they've been surging.
Yep.
So you have Steve Ross among the billionaires pursuing a stake in the Dolphins, for example. Now comes word that Josh Harris and David Blitzer in advanced talks to sell their minority stake in the Steelers to an existing investor group led by Art Rooney and Thomas Tull. This is according to our sources anyway. This transaction requires approval from the NFL, of course, could be finalized in the coming months. The financial terms couldn't immediately be learned. Harris and Blitzer bought a stake of less than 5% in the Steelers back in 2020, you may recall. Anxiety over office buildings has swept the financial world because of both remote work and higher borrowing costs. You know the story. For example, the Canadian Pension Plan Investment Board has been selling interest in some of its office buildings. They include a redevelopment project in Manhattan. They unloaded that stake for a whopping $1. The fund sold its 29% stake in Manhattan's 360 Park Avenue South for $1 to one of its partners, Boston Properties, which also agreed to assume a share of the project's debt. The investors, along with Singapore Sovereign Wealth Fund, bought the 20-story building back in 2021 with plans to redevelop it into a modern workspace. And it was a darling of the meme stock craze, now almost 3 years removed from its meme stock heights. AMC Entertainment Holding shares skirting record lows, the stock down 27% to start 2024. I did go in other theaters over the weekend. My daughter dragged me to see the Bob Marley movie, and I gotta say the seats were fantastic. Nice. I understood just several words of the dialogue. Hey, man.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
You're listening to Bloomberg Intelligence. I'm Alex Steele here alongside Paul Sweeney and John Tucker, who's discovered movie
It was
theaters.
basically like a dope movie because like the whole, it was all you could see the characters. There was just like a cumulus cloud of smoke.
We're just going to leave it.
Hey, man.
We're going Cool. We're going to leave it there. Anyway, you're looking at a market pretty much not doing anything. So let's head over now to Michael Barr for world and national news.
Alex, Paul, John. See what I'm working with here. Thank you, John.
We see you. We know.
There is new hope for an Israel-Hamas ceasefire. Bloomberg's Ed Baxter has the story.
President Joe Biden says he hopes a ceasefire between Israel and Hamas can take effect by early next week.
My national security advisor tells me that we're close. We're close. It's not done yet. And my hope is by next Monday, we'll have a ceasefire.
And State Department spokesman Matthew Miller says details are being worked out for the hostage release.
It depends on Hamas. We believe a deal is possible, and we hope Hamas will agree to one.
And they hope to have the final plan by the weekend. Ed Baxter, Bloomberg Radio.
Questions over immigration continue in the case of a nursing student murdered on the University of Georgia campus last week. The older brother of the man charged allegedly showed a fake green card to police as they investigated the woman's death. Both men are from Venezuela. Governor Brian Kemp is demanding answers from President Biden and immigration authorities.
She deserves justice. Her family deserves justice. And we need justice on a national level to prevent this type of thing from happening again.
The younger brother accused of murder has been under arrest in New York City, but was released before customs enforcement agents could step in. Law enforcement officials in Florida say Donald Trump Jr. received a letter containing an unidentified white powder. The substance was tested in a laboratory and found to be not deadly. Hazmat still testing it. More than a half a century after Americans set foot on the moon, we're having a rough time trying to get back to the lunar surface. The Odysseus lunar lander did make it to the desolate south pole of the moon, but people with the company that built it say during touchdown, it might have fractured a landing gear and it tipped over. Odysseus was meant to send back data for more than a week, but it is now expected to wind down sometime today, 5 days early. Global news, 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Paul, Alex, John.
All right, Michael Barr, thank you very much. So a story that I'm really interested in is Jeff Curry, who, for those of you who don't know, was the head commodities analyst at Goldman Sachs for years. Really well known, very well respected. I mean, he controlled a room and could get you excited about commodities like no one I've ever seen. He is switching gigs. So he left Goldman Sachs. He is now announcing today that he will be the chief strategy officer of the firm's Energy Pathways Group. He'll report into the Carlyle's energy chairman, and he's going to evaluate new investment opportunities across energy markets and the broader commodity supply chain. And it raises the question, like, what is life after a big Wall Street investment banking job?
Yeah, in my experience, it's very, very difficult to follow that up. So this is a great opportunity for Jeff Curry, who had, as you mentioned, a very senior position at Goldman, now going to a really high quality, one of the highest quality private equity groups. But I found in my career that on Wall Street, people tend to age out of that side of the business, late 40s, maybe 50. That's been my experience. And then the question becomes, what's the second act? And of my generation of colleagues, very few, I think, find a really good or comparable second act. That's the problem. The flip side of the problem is, if they did it right, they've made enough money that they don't really have to worry about it too much. But it's a challenge, you know. So for somebody like Jeff Curry, again, who was had such a high profile at Goldman Sachs, to land such a great job at a place like Carlyle, it's a great opportunity.
What I'm also really interested in is that a lot of these guys are rolling off the big banks and going somewhere else, and it does sort of raise the question of the energy transition part. It's like we talk about energy transition, it's not just solar companies or wind companies that are going to be financing this. It's oil companies, and it's private equity, and it's governments. And all of that capital is going to be spent on making brown green, right? Like making oil greener, and how to do that. And I find that Harvey Schwartz, who now leads Carlyle, is really invested in the energy transition. And it's interesting that they hire an oil guy to sort of help make that. Anyway, really great stuff. We love Jeff Curry. Much more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Mary Ross Gilbert. She's a Bloomberg Intelligence senior equity analyst. She covers the retail space. We're going to talk to her about Macy's. Some news out there. They're shutting about 150 stores. We'll get the latest on that. Plus, Hog Sherman, Chief Executive Officer and Chief Investment Officer at Tectonic Holdings, joins to discuss where to invest in the dynamics of energy.
It doesn't have to just be energy.
Let's talk energy.
I'm just saying. It's not just that.
Catherine Doherty, Bloomberg finance reporter, she's got a column out entitled "Bankers Will See 3/4 of the Workday Transformed by AI." I'm fascinated by that. We'll have that coming up as well. But first, let's kick everything off with Mr. John Tucker.
All right, and this Bloomberg Business Flash right now being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with the solutions they need to grow a thriving business. Commonwealth, go where you grow. Visit commonwealth.com to learn more. Major stock averages mixed to unchanged. The S&P 500, yet 7 of the 11 major industry groups lower. The biggest drag coming from energy, and that's where you're going to find shares of Chevron. You guys talked about that just a bit, down about 2.4%. In the lead, you have utilities as well as communication services. Victoria Fernandez, the chief market strategist at Crossmark Global, says if you've made gains from big tech lately, think about putting that money to work elsewhere.
It makes sense that you should go in and trim a little bit of that. Take some off the table. We're not saying liquidate your holdings. Obviously, you want to have that exposure, but we do think this momentum that we're seeing in the market is going to go on for a little bit longer.
And Lowe's says its sales going to fall farther this year. Consumers continue to hold off from sprucing up their homes, but the results that they reported better than feared, so Lowe's shares right now up 2.9%. Overall, the S&P 500 unchanged at 5,070. The Dow Jones Industrial Average 129 points lower. The NASDAQ 100 29 points higher. That's up about 0.2%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right, John Tucker, thank you very much. So we owe Abigail
we do.
a semi-apology. So
we were making fun of you. Well, not really, but...
Once we cracked up at the Norwegian cruise and the cholera thing, apparently, as I researched, they were worried it was cholera. Because of the vomiting and the diarrhea, it turned out not to be cholera. It was a tummy bug.
Okay, thank you.
But it didn't deserve like the amount of laughing that I had at a ship having cholera.
So I didn't read the story it wasn't a Bloomberg story. I just saw the headline.
Yes.
But it would have been extreme for me just to come up with cholera in my head. So I feel
to be
a
fair,
little bit better.
and CBS says Norwegian Dawn cruise ship allowed to dock in Mauritius after cholera scare. So henceforth,
not a bad place to be docked.
I don't know if I was worried about cholera. It still seems kind of bad.
Where's Mauritius?
It's by the Seychelles and the Maldives.
Can you help me out a little bit more there?
In the Indian Ocean.
Thank you.
It's one of my top destination spots.
Would be a great place to cruise,
honeymoon.
Like that would be perfect.
Wow. Yeah.
Do you dive?
Perfect honeymoon spot, I think.
Do you dive?
Really?
Go diving?
I have not gone diving yet, but that's something I could certainly do. I could swim before I could walk. So yeah, I would love to dive.
We are. Me no diving, no thanks. I'm scared of fish.
Did it in Bermuda.
You're scared of fish?
Yeah, I'm weird.
Even small fish?
I can't. I can't.
No, I hear you.
Lakes and fish. Like, I'll go to my knees.
Really?
Oh, so you won't go swimming in a lake?
Oh, heck no lake. Bye-bye.
Really?
No, definitely no to a lake. Yeah.
What do you do in the Berkshires?
I sit at home and bake.
Oh, wow. I'd love to come over and...
pretty much do that anywhere.
Yeah, but I have a nice view, and the oven's really nice. And anywho, there we go. We now apologize for the cholera crack up.
All
But
good.
Anyway, what's going on in the market? What are you watching?
Well, right now I'm watching, since the major indexes aren't doing much, speaking of healthcare, Viking Therapeutics up 91%, and it has to do with obesity drugs, of course. They had a mid-stage trial that was very impressive. On this, we have the XBI, or the biotech ETF, up about 3.3%, the best in nearly 2 months. And the last time I looked, Eli Lilly was down on the possible new competition. Not down so much, though, and what it could do to pricing. And let's see what Novo Nordisk is doing. But I guess my point is that this is the AI of healthcare. These weight loss drugs. I'm not a huge fan of the idea in some ways. I just wonder if there's going to be repercussions at some point. But it seems as though it's helping a lot of people. I do have a friend who, before it was even a thing, started taking it. I know that it was very helpful to her and made her very happy. So, but it seems as definitely a trend of the
the issue now is that people just can't get it. The supply is just not there.
Is that tight?
Yeah, it really is. And so I know Eli Lilly and Novo Nordisk, they're out there, but I bet you a lot of folks be like, well, we need some more supply.
Well, I think that the broader take here is that the idea is that this actually would have massive repercussions across all areas of the healthcare industry, because if you reduce obesity, you reduce heart disease, you reduce a lot of other issues that then you might be on medications for, pay for hospital stays 20, 30, 40 years down the road.
Great point.
And if that stops that from happening or reduces that risk, it's an enormous shift and burden in the healthcare system. So I think that that's the idea behind it, according to the companies, rather than like, let me just lose a couple pounds.
That's comforting to hear.
Which I think is driving a lot of the demand.
Yeah, exactly.
Yes, I think it is.
Which is different than like, let's just get that tummy bug that Norwegian cruise people did and lose those 5 pounds. That's how you can do it that way. What else are you looking at?
I'm also looking at China stocks. The NASDAQ Golden Dragon Index up 2.2%. I don't think that there's any particular reason why. It seems to be driven by some of the EV makers. We also have outperformance from the Russell 2000. It's interesting, when large caps are higher, which right now they're basically flat, fluctuating. Small caps tend to be down, and when small caps are higher, large caps are doing what they're doing today. So in some ways, that's positive for the market, because it means that you have money moving around within risk assets. And then speaking of risk, Paul, you must be in heaven right now. Bitcoin close to $57,000, highest level since I think December of 2021 or 2022. But what's interesting to me about it is Well, first of all, MicroStrategy. I want to talk about MicroStrategy because I used to cover, when I was an institutional equity salesperson, MicroStrategy was one of the hot stocks.
Yeah.
When I first saw it before the dot-com bust, it was like $500, and then it was like $2. But it was always a great company, their software, and a well-run company. But it's so interesting to me, if I understand their strategy around Bitcoin, they're basically a software company, but they are also a principal trader of Bitcoin, which, if shareholders understand it correctly, it's fine, but you really are swaying with the the moves of Bitcoin. But from a broader standpoint, 2 years ago, everybody was saying the VIX was broken. Take a look at Bitcoin as that risk-on, risk-off indicator. So right now, Bitcoin is suggesting that it's risk-on, overall. And in fact, the VIX has a 13 handle, so it would confirm that. Investors, really not that worried. Now, what I will say is, technically, there is a bearish divergence for all of the indexes. You have these higher highs on less and less bullish momentum. We talked about this last week, I believe. Weak hands basically buying at this point, which can get flushed out, pretty quickly should something come down the pike.
All right, Abigail, thanks a lot. Really appreciate it. Thank you very much. Abigail Doolittle joining us there. Let's go to Macy's. That stock is now up by 3.6%. They're closing about 150 namesake stores. Certain areas like Blue Mercury did pretty well, which, as I keep telling you guys, invest in your face is a thing.
Okay, but I think it's the time has passed for John and I. I mean,
no, it's never too late to
I
invest
went
in your
into
face.
one of these stupid stores with my daughter.
Oh, boy.
She wanted, whatever. The margins on these things must be incredible.
Yes.
I'm like, there was $80.
And they never go on. You don't even want to know what I spend on my skincare, but they never go on sale. You just have to take it, and you can see that through Macy's numbers for Blue Mercury. Anyway, Mary Ross Gilbert is going to help me out here. Bloomberg Intelligence senior equity analyst covering retail. Okay, Mary, what did you make of Macy's quarter, and do you invest in your face?
I invest in my face. That's why beauty has been the outperformer for almost anyone who announces, including when Dillard's came out with their numbers yesterday. So with Macy's for the quarter, they beat their estimates on sales and on earnings margin, so sort of across the board. But the focus really wasn't on how they did in the fourth quarter. It's really their new plan. That was the big focus, the new plan and their guidance for the year. So their guidance came in softer than consensus. And I guess it's just no surprise, just thinking about how department stores are under pressure. And we've seen it across the board with, again, Dillard's showed some weakness yesterday. We're seeing it with Macy's in their outlook. But Macy's has a plan to address the department store model in shuttering 150 underperforming stores, and then they're going to invest in the 350 remaining. And those are going to be primarily in A and A+, plus malls. And what they're going to do is increase the service levels. Beauty has been something they've been investing in almost every year and expanding the floor space dedicated to beauty. So you'll notice that if you walk into Macy's, you'll see that they have expanded the space, and who knows, they could expand it again this year. We've been seeing it for the last 5 years that space has been expanded. So there's a lot of details in what Macy's is doing. It's something they need to do. They really need to up their game, and that's exactly how they started their presentation. And that includes really making the assortments a lot better than they are. Because if you look at the inline store performance at malls, they're the ones that are executing, such as the Abercrombies, the Urban Outfitters, they're outperforming.
So, Mary, I was kind of surprised to see this number of stores, 150, because I kind of thought that this decade-plus-long shrinkage of department store footprints across the country by a lot of different companies, that was more or less kind of we're done that, or we're at near the finish line. So to see another big round of closings, that kind of surprised me. Did it surprise the market at all, or is this something that analysts and investors have been asking for?
Question, Paul, because I think they needed to close these stores, but what Macy's had said is we don't need to close stores except for the usual stores that you close every year, which is maybe less than 10 per year. But the reason that they've decided to close them is because these stores were underperforming, but they were still profitable on a four-wall basis. So historically, their thought was, well, if it's still profitable and we're still generating cash, we'll keep it open. And this time what they did is they took a more holistic approach. and said, okay, even though it's four-wall profitable, we could do a lot better with the funds that we could generate closing these stores, selling the real estate, and redeploying it back into the existing store base and for all the initiatives that they have going forward. It makes a lot of sense because let's face it, we really need to rethink the department store model. It has to evolve.
Mary, does this do enough to get activist investors off Macy's back?
That is a good question. I think it may. I think the board has made it very clear that they are supporting this plan. Could they enhance the board with additional directors? That could be a possibility. So we'll learn more about that in the coming months. But I think that this plan it's been decided that this is the move forward. And when you think about what's happening with the activists, it usually involves the real estate. And what we have seen in past transactions is the real estate is usually milked, and it can be to the detriment of the retail operations. And so sometimes it's not always the best move.
So Mary,
but they do have valuable real estate here.
Talk to us about like a relative performance between like a Macy's store and a comparable Bloomingdale store. Is the Bloomingdale store materially more profitable, I guess?
Yes, they don't disclose the profitability on Bloomingdale's versus Macy's, but Bloomingdale's outperforms, as does Bluemercury. This year, their comp sales were down 1.6% because the aspirational luxury consumer is spending less. And we've been hearing about the overall luxury business being impacted, especially after we came off the post-pandemic spending from stimulus checks that really had that aspirational customer going after luxury. So now that that's kind of, falling back, we're seeing more of a normalization. This is something Nordstrom also cited. So their sales were just down 1.6%, but they think that could probably stabilize and go higher next year. And of course, with the beauty side on luxury, that's posting positive comp sales. So that's stronger.
Yeah, Mary, I was going to ask about then the inventory. Macy's notoriously last year struggled with inventory. The last quarter we saw they really got it together. What did we learn this quarter about their inventory?
Yeah, so even though inventory was up 2% year over year, it's still down over 20% versus 2019. So they've really done a great job reducing their inventory, and that means that they're having less clearance activity. This is something that's going to affect their first quarter. Because last year they had more clearance and this year less. So they're doing a great job overall. They've just been improving their execution with data, technology, logistics, and they talked about that on the call. They're going to be even employing some generative AI. They've already been employing machine learning. We'll see more, and they're going to be streamlining operations. We didn't talk about that, but they're going to be consolidating some of their facilities. So they've reduced layers within the management structure. So overall, simplifying the operations. So all of these things could restore positive growth in 2025.
Mary, who's the retailer out there that you think is doing the best job?
Of all of retail or just within the department store space?
Just kind of within your coverage, because you cover a broad range of the retailers.
Yeah, so I think that what we're seeing right now is some of the inline specialty retailers are doing really well. If you look at what Ralph Lauren has done, Ralph Lauren is outperforming. But what they did was they sort of retrenched the business. They do supply to Macy's and other department store retailers and with their wholesale business, but what they did is really focus on DTC, direct to consumer. This is something other brands have been doing as well, but Ralph Lauren cut back on off price. They cut back on wholesale. They elevated the product so it's much higher quality, and then they've elevated the overall consumer. And so it's much more of a luxury brand now, but they also do have, some aspirational brands in their portfolio, like Ralph Lauren, which you'll find at Macy's. And then you'll find Polo Ralph Lauren, and Double R Ranch in their Bloomingdale's concept, for example.
Hey, Mary.
So I think that Florin's a good example.
Mary, we appreciate it. Thank you very much. Mary Ross Gilbert, Bloomberg Intelligence Senior Equity Analyst who covers retail, joining us on Macy's. Did I tell you guys that my husband is starting to use skincare?
Really?
So he's 60 and he's
Why are
starting
you
to use
embarrassing
it.
the poor man?
No, I give him props. I mean, he's doing it wrong, but but my point is that, like, what if you can get men really invested in skincare?
Oh, man, that'd be
He's not like putting makeup on, is he?
No,
Okay.
he's
Just some
investing in his
moisturize-
face.
Investing in his face. That's what it is.
When you become a certain age, Tucker, you gotta do that.
At what age would that be?
Well, now. Anyway, you're listening
use
to Bloomberg
Irish Spring.
Intelligence. Do you? That's not good. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker of the Bloomberg Newsroom. With this Bloomberg Business Flash, we have the major stock averages. They continue to be mixed today. Norwegian Cruise Lines, that remains the best performing stock in the S&P 500 right now after its earnings results. It is up close to 8% in trading so far. And then on the data front, the Conference Board had its Consumer Confidence Index declining for the first time in 4 months in February. Earlier, factory orders for durable goods, they dropped 6.1% in January. That was the most in almost 4 years, and you blame commercial aircraft for that. Those orders plunged. Tomorrow, we're going to get another reading on the economy with the GDP. And, of course, the biggie, the PCE on Thursday. And if I have to tell you that it's the Fed's preferred inflation gauge one more time, my tongue is going to roll off its, snap off its roller. S&P 500, make it 2 points lower right now, 5,067. The Dow Jones Industrial Average, 155 points lower. That's down 0.4%. The NASDAQ 100 is 10 points higher. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
But you did. You said preferred inflation gauge, so you did it. Okay, excellent. And also consumer spending or something we get to. That could be fun.
Okay.
Yeah, he's not getting excited. All right, fair enough.
This is somebody who gets excited about auctions, so.
I do, and also oil. I get excited about commodities.
The 7-year today.
7-year?
I didn't even know we sold 7-year paper.
Yes, he did. I'm also excited about commodities. Lots of things happening in that space. We learned earlier that Exxon and CNOOC are trying to prevent Chevron from taking over Hess because of the Guyana asset. They're trying to sort of get the rights of first refusal. That's interesting. We're seeing a lot of natural gas deals getting done. We're also seeing natural gas prices continue to tank, like under $2 MMBTU is really tough for some of these producers. So we want to get a broader perspective on how to invest. And Haig Sherman is Chief Executive Officer and Chief Investment Officer over at Tectonic Holdings. Now, he is a big deal in the energy space. He manages about $6.7 billion across all asset classes, not just energy, but he was the guy that you go to for this kind of energy advice and energy investing. Haig, it's great to have you. Thank you for joining us. There's a lot to talk about. What is foremost on your mind when you think of investing specifically in the energy space?
Well, I think foremost on my mind is really the consolidation that's going on in the industry. So if you look at both oil and natural gas, you have some major transactions that have been inked. You just mentioned one, which is the Chevron Hess deal, which is being attacked effectively by Exxon based on their right of first refusal on the Guyana assets of Hess. But you also have in natural gas, you have the Chesapeake Southwestern transaction, which is similarly very interesting. So I really think this is the central thesis of energy, which is we want to have more scale in the basins in which we operate because we're really in the manufacturing business. We're manufacturing molecules. So scale, operational efficiency, and inventory matter.
Hey, I hear, I have a lot of buddies from my Payne Weber day. I know you were there, David Bradshaw and a bunch of other guys that were in the energy space. What I know is from them, E&P was the fun sector to cover there for a while. But I get the sense that these E&P companies aren't doing too much E these days. They're just kind of in production. Is that the case, and why is that?
Good question.
That's exactly right. So if you look at historically, as we grew up, especially here in Houston, the E was kind of the glamorous part of E&P. I mean, you had these great offshore projects. You had, these frontier projects, the North Slope, when Russia opened up. You had the Sakhalin Island. You had Kazakhstan, and you had other projects. And this was really the glamorous part of the industry. And our oil and gas companies were intrepid. They would invest, but they also had a long time horizon. Today, that time horizon is much, much shorter. With the onslaught of renewables, the executive teams of these big E&P or these big energy companies are more focused on delivering short-term investor returns, delivering cash back to investors. They don't want to take duration risk. So they're really focused on becoming manufacturing businesses with good core holdings and good inventories of areas of current operations.
So how do you invest in that when they're becoming a different type? It's becoming a different type of industry in essence.
Well, I think you really focus on those that are best at manufacturing the molecules. I think Exxon is an excellent, and they've really been on this trend for quite some time. They had a big 2019 initiative to cut costs and really become more efficient. EOG is another kind of a mini Exxon without the downstream operations, very efficient. They understand that this is about inventory, unit level cost, unit level productivity, and economies of scale so that they can deliver the best return possible to their shareholders.
Hey, so you're right there in Houston, you know, the center of the U.S. energy business, maybe the global energy business, I don't know. Talk to us about renewables. How committed, to what extent are U.S. energy companies kind of committed to renewables? Because some of the rhetoric coming out, I don't know if it's just politicians or others, or I'm just not sure. It seems like it's more commitment out of some of the European energy companies.
And I think that's right. I think if you really look at the big integrateds in the U.S., there are certain areas that they're focused on, carbon sequestration and other areas. But to their credit, they've been focused on what their core competency is, which is producing hydrocarbons. And if you look at Europe, which you brought up, BP's under a lot of pressure now for abandoning hydrocarbons, or at least de-emphasizing hydrocarbons. So I really think that the U.S. energy companies got it right. But we have other areas of investment, particularly here in Houston and Texas. Texas is a U.S. leader in renewables. We have great private equity supported the industry here in Houston and throughout the state and really throughout the country. And so we're getting that built out independent of our E&P companies or our energy companies.
So, Haig, as I talk about how to invest, it's really going to be private equity, it's government money, and it's oil companies. Like, those are three buckets that I see that invests in the energy transition, not just straight renewables, but the energy transition. What in the energy transition do you like the best? There's so much money that's going to be wasted on stuff that doesn't work. What do you like?
It's a tough space to navigate right now, because if you really look at kind of renewables right now, and really over the past couple of years, it's really like the shale boom back in, call it 2013, 2014, before it crashed, because there's a lot of money that's coursing in. You know, prices are inflated. So to me, it's really an area that you have to be careful in, and that's why I like, you know, fossil fuels better at this moment than energy transition, just because I think the prices are better, and if you're a share or an investor looking for returns, you want to go to where you can get the best returns. So I've shied away from renewables, really focused on traditional fossil fuel energy, but the day will come when those will become more investable, in my opinion.
You know, I'm looking at this chart for natural gas. What happened? Holy cow. Things cratered. I thought people liked natural gas.
People like natural gas, and consumers like cheap natural gas.
Yep.
It's not great for producers, but it really is. It's a stunning collapse. I mean, if you look a year and a half ago, you were at $9 per MCF. Today, it's $1.80 or thereabouts. And so it's been a stunning collapse. A lot of it's weather-driven. You had a big LNG facility that was offline that really started. It was a catalyst for the current downdraft. And right now, we can talk about natural gas being a global commodity, but right now it's still largely a domestic commodity. So we really don't have the global support until we start opening up more LNG facilities, which will happen in 25 and 26. If you look at the curve in 25 and 26, it's more constructive, although it's not great.
So, but to that point, I mean, with natural gas prices at this level, are they economic for producers and for LNG exporters?
For producers, it's tough. So, I mean, a lot of them are hedged. And so, for example, I think Chesapeake's 44% hedged.
Okay.
So a lot of them are hedged in a higher price environment. And so they're still getting by. But if you look at really what Chesapeake announced last week was, we're not going to invest as aggressively in the space. And so that created a situation where natural gas got a modest bid, but all the energy companies in natural gas saw their stocks rally. There has to be this sea change within natural gas production where rigs are laid down, and that'll happen to a certain extent through consolidation. That's why the continued consolidation in the industry, taking privates out because they've been more active with the drill bit, and public companies have certainly been more disciplined than private companies as it relates to producing or drilling wells.
Haig, thanks a lot. Really appreciate it. Haig Sherman, he joins us, CEO, CIO of Tectonic Holdings. He joins us from Houston. In the case of Chesapeake, for example, buying Southwestern, they also just are basically leaving the natural gas in the ground. But then in a moment's notice, when natural gas prices tick up, they're going to go and explore it. So they have like the reserves around to do it. They have the equipment to do it. They have the know-how to do it, but not everybody does. So
do
that's
we know,
a different thing.
Oil, I understand it's like $40 to $50 per barrel cost roughly to get it out of the ground. Do we have what's the number for nat gas? Do we know?
You know, I don't actually know.
So I'm wondering at $1.67 whether it's economical to.
Yeah, I don't know that. The hedging question was a good one for him. But I also think that I've been talking to LNG exporters. Under $2 is really hard. Right. It's really hard to make that export number work for them. So I think that's interesting too, particularly with the moratorium, et cetera, how that winds up playing out. Anyway, enough energy for you? Do you feel
that's
you're
good? I love it. Cool. More the better. I think we should
It's going to be like 60 degrees today. So.
Yeah, exactly. With our news in New York City, here's Michael Barr.
Thank you very much, Paul. Alex John, President Biden is meeting with congressional leaders at the White House to discuss legislation to keep the federal government operating, as well as aid packages to Ukraine and Israel. It also calls for more funding for border security operations. President Biden says Israel would be willing to halt its war on Hamas in Gaza as Ramadan approaches if a deal is reached to release some of the hostages held by the militants. Biden commented on it during a stop in New York while on NBC's Late Night with Seth Meyers.
Israel has had the overwhelming support of the vast majority of nations. If it keeps this up without this incredibly conservative government they have, and Ben-Gvir and others, I've known every major foreign policy leader in Israel since Golda Meir, they're going to lose support from around the world. And that is not in Israel's interest.
Negotiators from the U.S., Egypt, and Qatar are working on a framework deal. Today is primary day in Michigan. Some Muslims in the state plan to vote uncommitted in the Democratic primary to send a message to President Biden about his support for Israel in the Gaza war. Dawood Walid of the Council on American Islamic Relations says the protest vote is a way for Muslims to flex their political power.
We believe that this year's upcoming presidential election is going to be extremely close, and that Michigan can decide who will be the next president of the United States of America.
Organizers of the Listen to Michigan campaign hope to get at least 10,000 people to vote uncommitted in today's primary, a nod to Donald Trump's margin to victory in Michigan in the 2016 presidential race. Global news 24 hours a day and whenever you want it with the Bloomberg News Now. I'm Mike Labar, and this is Bloomberg.
This is breaking news from Bloomberg.
Well, we got some breaking news kind of in my wheelhouse. CNBC is reporting, this is Alex Sherman over at CNBC. He's the real deal, so I'm taking it as some good stuff. Warner Brothers Discovery halts merger talks with Paramount Global. The issue is, the shares of Warner Brothers Discovery have been really under pressure, so I'm sure they don't want to enter into any deal with kind of their currency at this level. But let's break it down a little bit. I want to check in with Chris Palmieri. Chris Palmieri covers the entertainment business. He's out there in our Los Angeles bureau. He's been covering this space for a long time. He knows all the players here. So, Chris, it seems like nobody wants to kind of get together in terms of Warner Brothers Discovery, Paramount, some of these, some would call them subscale size companies.
That's exactly it. I mean, we've been told all along Warner Brothers was never really serious about this Paramount deal, just too difficult. Their stock tanked when it was even rumored that David Zaslav, the CEO, had met with Bob Backers, the CEO of Paramount. So there's so many reasons for that. There's the regulatory climate, makes it difficult for big mergers. There's the fact that, as you know, that these businesses are really in trouble. And so, as one analyst described it, as trying to build a life raft out of bricks. Putting these two particular companies together won't really solve either of their problems. So other people have taken a look. Private equity has taken a look. Wealthy individuals have taken a look at Paramount, and many have passed. So, is there any feeling out there in Los Angeles amongst the people you hang out with that how does this play out for some of these companies? Because I don't think they can stand alone on their own here in this changing world. The most logical possible exit would be one of the big tech companies, and in fact, that's what we're hearing potentially is it talks along those lines. You need somebody with a lot of cash without a business that's necessarily the exact same business from a regulatory standpoint, but some reason to merge it with it. And the problem is the declining traditional TV channels, and nobody really wants to take that on as they tackle this sort of streaming migration. All right, Chris, thanks for giving us a couple of minutes. We really appreciate it. Chris Palmieri, he's one of our senior reporters out there in L.A. covering the entertainment business. And again, the news just coming across the tape. Warner Brothers Discovery halts merger talks with Paramount Global. Sources say that's according to CNBC. All right, let's kind of reset here. We'll go to Mr. John Tucker for a Bloomberg Business Flash.
All right, major stock averages mixed to little change. Let's get an earnings scoreboard. 465 companies in the S&P 500. They have reported so far, opening their books. And by my calculations, 76% have delivered positive earnings surprises. As for the data, U.S. consumer confidence falling in February for the first time in 4 months. Thursday, we get the big inflation print with the PCE. Sarah House, economist at Wells Fargo, says the last mile towards the Fed's inflation goal isn't proving easy.
When we look at the inflation outlook, so there's still some services inflation, certainly in the pipeline. That tends to be a laggard, and so it's not necessarily saying to us that we're in for a reacceleration in inflation, but just that it's still a bumpy and long road.
And right now, the S&P 500, 5 points lower. That's down 0.1%. 5,064 on the index. The Dow Jones Industrial Average, 176 points lower. That's down about 0.5%. NASDAQ, right now, the NASDAQ 100, 8 points lower. And among the standouts today, Viking Therapeutics, those shares doubling after results from a mid-stage trial suggest the biotech company could field a competitor to weight loss drugs from Novo Nordisk and Eli Lilly. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Alex.
All right. Thank you very much, John Tucker. So apparently lots of different things are going to disrupt banking, and the latest is AI. I mean, I can't say I'm that surprised, but apparently there's a study that says that bankers will see AI transform 3/4 of the day. And this is according from a conclusion by the consultancy company Accenture. That feels insane to me. So we have to get some clarity on that with Catherine Doherty. She joins us now from Bloomberg. All right, Catherine, what?
It's absolutely right. I mean, it's a big transformation that we're talking about. And I don't think that banking is unique, but this study really dived down into the tasks and the amount of time that workers are spending on their day-to-day. And think about a bank teller, for example, which is already changing based on what they're serving the customer that's coming into, let's say, a retail branch. I don't think many people are going in asking to cash a check with a person. Most people are doing that on an app right now, and so you've already eliminated the people element of the task. But when you add in AI, there's still tasks that could be sped up and which could save time. And what this study was showing is not only will the time transform, if you get time back, you can use that on other things. You can interact with the client in other ways, in other necessary ways that need people interaction, not just AI. I think it is very important to note that AI can't take care of everything. There might be certain mundane tasks, especially as it relates to data and numbers, but you're still going to need to have conversations when it comes around financial planning and other elements when people get very sensitive talking about money. That might need a human interaction, not just a bot.
Well, in your reporting here, analysts at Bank of New York Mellon can wake up 2 hours later to write their research because AI technology can create a rough draft and prepare related data for them overnight. Chief Executive Officer Robin Vince said on an earnings call last month.
That's right. Yeah, he said my analysts can wake up at 6 instead of 4 a.m. and have the same report.
Like that? I mean,
I think that getting 2 more hours of sleep, sure, who wouldn't?
No. We would like that.
We would like
the bosses.
that.
I mean, the bosses would like the
so
scramble,
what the
right?
bosses are saying is that this is additional time they can use on other things. Think about it. It's not just, oh, you'll get 2 hours back and you can...
we're coming for those 2 hours.
But you can use that in other ways. Now, he was using an example of it. You might be able to sleep in or whatever it is. But efficiency is the main goal here in using this technology, and not just to make people lazier.
Banks can boost their productivity by as much as 30% using generative AI over the next 3 years. That's according to Accenture. That seems like a pretty big number.
Yeah, and they talked a lot about also the earnings that you can get. Not only are you going to be more productive, you might be able to generate more revenue. Think about the amount of customers you might be able to handle their inquiries if you are assisted by AI. You might be able to get through more of those questions. And at the end of the day, again, it is about productivity that leads to potentially higher earnings.
Well, I mean, this is from the people perspective. If you look at the writer's strike and the actor strike out in Hollywood, it was all about job security as it related to AI. That's all it was.
Well, and streaming.
Yeah, but as it relates to AI, it was just to what extent will that replace me, the worker? And so that's what they had written into their contracts. And when I read your piece, I thought the exact same thing. If somebody's writing a research report, that means my value as a research analyst is less.
But so what's interesting about this report, they did dive into the way that each role could be transformed, some more than others, based on really if your tasks have to deal with data. Think about again, I'll use the bank teller as an example. They're dealing with tons of data, so AI might be a higher use than another more person-to-person interaction. But everyone will be impacted, bottom line. How much you're impacted varies. And when you are impacted, if you, for example, have AI that assists your job, you can find new ways to either, the report talked about transferring to another role within the bank. You're not necessarily going to be eliminated, but you could still be used. So it could be moving decks on the ship. I think that's kind of how I read into this report. It wasn't just eliminating people. People are still necessary. It's just could they be more efficient?
I mean, but isn't this the thing, right? Like you put people in different jobs that they didn't necessarily get hired for, they didn't necessarily like it, and then they quit. Like this is the way of putting people out the door.
Yep.
Yeah.
And I mean, particularly financial services, the only asset you have walks out the door every day at the end of the day. And so that's your cost base. And if you can cut costs there, that's where they go. That's how I read into it, Catherine.
We're a little bit too jaded over here. A grizzled
veteran over here who's been around for cycles here. Catherine Doherty, thank you so much for that. Appreciate it. Catherine Doherty, finance reporter for Bloomberg News, joining us live here in our Bloomberg Interactive Broker Studio. S&P 500 is still unched on the day. Nothing happening at the index level. We'll have more coming up. This is Bloomberg.
your company news headlines on Bloomberg Radio.
And I'm John Tucker in the newsroom with some of the company stories we're following. Let's just recap that red headline that we got crossing the Bloomberg. Warner Brothers Discovery halting the merger talks with Paramount, according to CNBC. Now, am I being stupid when I admit to you that I didn't even know they were in merger talks?
No,
Okay.
not in this particular circumstance. No, you're good.
All right. I love Chris Paul Murray's take on the industry, building life rafts out of bricks. Another story we're following, the firing of American Electric Power Company's chief executive officer after less than 14 months highlights a demographic reality of the business world. Women in the top spot have shorter tenures than their male counterparts. This is Julie Sloat we're talking about. She became CEO in January 2023. She's going to be replaced temporarily by a board member while the company searches for a new leader. Her departure comes just weeks after billionaire investor Carl Icahn secured 2 seats on the board. Sloat's ouster underscores that even as companies work to advance diversity and inclusion initiatives, female CEOs remain relatively rare, and they also spend less time at the helm than male bosses do. One potential reason for the discrepancy, research shows that activist investors are more likely to target companies run by women. And according to most recent government statistics, about 70% of the adult population is strictly wireless, meaning they live in households without a landline. Only about 25% of adults have both a cell phone and a landline. But is that smart? Take the AT&T outage that we had recently. Hardly one of its kind. In fact, there are more than 4,000 network outages a month. This according to a recent Wall Street Journal report. And I confess I do still have a landline. Call me old-fashioned. That's your company news.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
You're listening to Bloomberg Intelligence. I'm Alex Steele alongside Paul Sweeney. In no way, Paul, did I ever think that John Tucker didn't have a landline.
No.
Just to be clear,
Sure.
that was just saying, look, this
That's
is
old-fashioned, I know, but, take Michael Barr. He still uses a carrier pigeon.
Which did really well when AT&T cellular service went belly up the other day. All right, Michael
Just
Barr.
heard the pigeons just coming in now.
Give us some world national news, Michael Barr.
Alex, Paul, curmudgeon, thank you very much. President Biden is meeting with congressional leaders as they face a Friday deadline to pass a spending bill to avoid a government shutdown. The top 4 congressional leaders are also meeting with Vice President Kamala Harris. If lawmakers do not reach a deal by Friday, then funding for several key agencies will run out, including agriculture, transportation, housing, and veteran services. More than 100,000 federal workers would go without pay. There was some serious talk in between the jokes on NBC's Late Night with Seth Meyers. President Biden talked about his likely GOP opponent's role and chatter about sabotaging the southern border bill. Biden accused former President Trump of putting his wants over the country's needs.
The idea that he said the Congress wants to pass an overwhelmingly a border provision that would allow us to control the border. First bill ever introduced called for that. And here he's saying, no, don't do that because that'll help Biden.
Former President Trump's poll numbers are improving as he gets closer to a likely 2024 rematch with President Biden. The latest Real Clear Politics average gives Trump a 42% favorable rating. That's up from 36% in December of 2022, and it's better than President Biden's 40% rating. Bloomberg's Jody Snyder has more from Washington.
This percentage of voters with favorable opinion can show strength of a candidate's brand and tend to mirror national election polls. It's, of course, when people are not going to the polls in the general election until November, so there's still a lot of time. But this must be concerning for Joe Biden and his campaign.
Bloomberg's Jody Snyder in the nation's capital. The Insurance Institute for Highway Safety is out with its annual list of safest vehicles. Hyundai Motor Group, which includes the Genesis and Kia brands, led with 16 top safety awards. Toyota, which also owns Lexus, followed with 13 awards. Mazda earned 6. The Ford Explorer was the only model from the big 3 U.S. automakers to make the grade. Global news 24 hours a day and whenever you want it. With Bloomberg News Now, I'm Michael Barr. This is Bloomberg. Alex, Paul, and John.
All right. Thank you so much, Michael Barr. So I want to get back to the headline that we got just a little while ago, that Warner Brothers Discovery apparently halting merger talks with Paramount Global. This is according to sources. Apparently, Skydance Media is still doing some due diligence. Comcast is not interested in buying any of Paramount Global's assets. Paul, do you really think that a tech company would buy Paramount?
Possibly. They haven't shown really any appetite to date, but there's certainly a possibility, and they certainly can afford it. It's very easy. Both of these stocks, Warner Brothers Discovery, Paramount, they're subscale, arguably, in this new world where it's all going to streaming. Both of their stocks are down about 45% over the trailing 12 months, so the Wall Street really does not like how they are positioned. So the question is, if you put two of them together, would they be any better off? And that's debatable. Even putting those two together, would that have enough scale to go against Netflix, Amazon, Apple, to the extent they continue to ramp up their media businesses? The Walt Disney Company probably feels like they are at good scale, but even they are struggling here a little bit with their streaming businesses. So it is a very uncertain time for the traditional media companies, and they kind of feel like they're flailing out there trying to figure out how can we kind of survive this.
But also, if you're a Netflix and you're delivering profitability, do you really want to go out and have this enormous content spend by buying a Paramount, for example?
No, you don't. And Netflix doesn't need to buy anybody because they have their own.
They're doing it all on their own anyway.
They create their own stuff. Everybody wants to work with Netflix, work for Netflix, so they're fine. It would just be, would Amazon want to buy some content? Would Apple want to buy some content? Would, that kind of thing. And I think the answer to date has been no. But maybe if some of these are really up for sale, I mean, how often does a Paramount Studio come on?
How long will it be on the market?
Yeah.
I also feel like is something to that. You're looking at S&P again, pretty much going nowhere, Paul. NASDAQ up 2/10. Quiet day here. Bounce of power up next.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
4 days to a government shutdown. Will another meeting fix it? Welcome to the fastest show in politics. As the Speaker of the House, other congressional leaders traipse back to the White House today to sit down with the president to talk about funding the government. They're in the room right now. Can they make a deal? We'll talk about it with Jonathan Tamari from Bloomberg Government. He's watching so you don't have to. And on this Michigan primary day, we'll talk about the many challenges facing Joe Biden in this all-important swing state with insights today from Caitlin Legacki at Four Corners Public Affairs and analysis from our signature panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us. And glad you are, too. Let's get started, as always, with a look at Wall Street. For that, we turn to Charlie Pallett in New York. Hey, Charlie.
Very much, Joe Matthew. Indeed, we have got the Dow, the S&P. They're both lower. Little change right now on the S&P 500 index, down by 1 point at 5,068. That is a drop there of less than 0.1%. The Dow right now down 165 points for the Dow, a decline of 0.4%, while NASDAQ is up 36 for the NASDAQ Composite Index, a gain right now of 0.2%. We've got the 10-year yielding 4.28% with a 2-year at 4.68%. Spot gold trading higher, little changed, up by 0.1%, 2,032 the ounce, and West Texas Intermediate crude up 1%, 78.35 a barrel. Cannot ignore Bitcoin today with a 57,000 handle. Bitcoin right now 57,041, up 4.4%. So the Dow, the S&P, they're both lower. NASDAQ is higher. Victoria Fernandez is chief market strategist at Crossmark Global Investments. She told us she is concerned about valuations and says it is time to start trimming some of those big high flyers.
Look at the PE of the market, 20 and a half, close to 21 times. There's not that many times historically where we have had this level, and when we have, it's usually been followed by some not so great moves in the market.
And we're keeping an eye on shares of Warner Brothers Discovery and Paramount. Right now, we have got
Both companies trading higher. Warner Brothers up by 2%. Paramount higher by 2% as well. According to CNBC, citing sources, Warner Brothers has ended its pursuit of a merger with rival Hollywood studio Paramount Global. Recapping, S&P down now by a point, little changed. I'm Charlie Pellet. That's a Bloomberg Business Flash. Back we go to Washington. Balance of power continues. Once again, your host, Joe Matthew.
All right, Charlie, we thank you. Welcome to, is it only Wednesday? Tuesday? It's that kind of week. The Tuesday edition of Balance of Power. I really had to think about it. With the line coming from the senator from West Virginia, it's just a misery march. Shelley Moore Capito talking with Politico about the desperate attempt to fund our government and what could be a fourth stopgap solution coming up this week. Friday, we're down to 4 days now. Friday is the shutdown at midnight. Now, here's the news. As for that misery march, they marched all the way down the other end of Pennsylvania Avenue to sit down with the president. And they're in the room right now, in the Oval Office. Mike Johnson, the Speaker of the House, along with Hakeem Jeffries, Democratic leader in the House, and then the two leaders from the Senate, Chuck Schumer, Mitch McConnell. They're all there at the couches. And it's not just the president, by the way. Kamala Harris at the other seat, flanking the fireplace as they sit down for this important conversation with a couple of big things to talk about here. It's not just funding the government, it's Ukraine and the president talking about the quote-unquote dire need for funding right now in Ukraine, also taking a jab at Mike Johnson. Says, I'm sure you guys have that all taken care of, referring to government funding. And that's where we start with Jonathan Tamari at Bloomberg Government. He, of course, covers the leadership, including Mike Johnson in the House of Representatives, and is bringing us the view from his perch today. Jonathan, it's great to have you. What expectations should we have around this meeting? This is not the first time Mike Johnson's gone to the White House, and it hasn't exactly drawn a deal so far, and I'm sure he's going to want to take some pokes at the president following this meeting at the stakeout camera. So is this politically motivated, or are they trying to get to a solution?
Well, I think they're trying to get to a solution, but the solution from the perspective of most people in that room is to pass a compromise spending bill and to pass aid for Ukraine. I think when you have all four leaders and the president in a room at the same time, that there's an effort here by the White House to put Speaker Johnson on an island and show that he's isolated among the main players in this whole drama, because the president supports a compromise spending bill and aid for Ukraine. Chuck Schumer does, Mitch McConnell does, Hakeem Jeffries does, and that just leaves Speaker Johnson as the one person who's really kind of standing in the way of both of those things. So I think that's more what we're seeing here is more of a pressure campaign than an effort to compromise more, because everybody else is on a similar page.
Well, so whose side is Mitch McConnell on here? I know that he's very much pro-Ukraine funding. In fact, some have suggested that he's willing to end his career on this issue. But he's also the other Republican in the room.
Yeah, but he's not giving Johnson any cover. He gave speeches yesterday and today where he stressed the importance of funding Ukraine, where he said that he's warned that, the future of America's allies is at stake, that potential there are risks to democracy if Russia is allowed to fall. So, and he signed on to the bipartisan bill that passed the Senate. So he's clearly in favor of allowing the Ukraine bill to go forward. And when it comes to shutdown, he said, shutdowns don't work, never result in a positive solution, either politically or for policy. So he's making it clear that if Johnson wants to fight these fights, he's not going to have support, at least from the top leader in the Senate.
Well, let's talk shutdown, Jonathan, because in any other world, this would be our top story. We're 4 days away, and I know it's not the whole government. It's 4 spending bills, and the other 8 are the next Friday. This is going to be a 1-2 punch here. When the House gets back, I know the Speaker's down the road at the White House, but the House is not back until tomorrow. They'll have 3 legislative days to work on this. Nobody thinks they can get a bunch of spending bills done in that time. So is this a CR or a shutdown?
It looks like a CR. I mean, Johnson has said he doesn't want another CR, but he also has not ruled that out this time. The thing is that Johnson wants to placate his hard right members in the House Republican Conference. They, as we saw with Kevin McCarthy, kind of hold that sword over him where they could try to oust him if they think he compromises too much. But he also seems to realize that a shutdown is bad politics for Republicans, that there are other issues like the border that are much more favorable to Republicans, and that he would rather kind of keep the focus on those things. And so he has compromised multiple times in the past to keep the government open. So that seems, if past is any indication, that would seem to be where he goes, but it's unclear because every time he does compromise, the next compromise gets harder because he gets more and more people angry at him within the conference.
Well, so what's
we'll
better
see
for him right now? He's vowed no more CRs. His majority whip, Tom Emmer, told us on Bloomberg, there will not be another CR and we will not shut down. I don't know how you get both, Jonathan, but if you're Mike Johnson, what's worse for your career, a CR or a shutdown?
I mean, I think it depends on whether you're looking short-term or long-term, right? A CR could bring some backlash from the hard right, and maybe they could try to unseat him now. But if you shut down the government, you might be endangering a whole lot of your vulnerable members who are going to, A, be unhappy with him now, and B, be more at risk in their re-elections this fall. And if you lose those members, then you're going to lose the speakership anyway. So I think it comes down to a question of whether he wants to face a potential motion to vacate. You know, my feeling, my belief anyway, and this is not based on reporting, this is based on my instinct, is that a lot of Republicans don't want to go through that again. I don't know that they would really be able to unseat him, but we know the threat is there, and that would only take a very small number of votes to succeed.
Look no further than the tweet thread from Chip Roy. He says, "What's the status?" All caps. Short answer. All caps. No plan to fight. Jonathan Tamari, it's great to have you back as always. We love talking with you. From Bloomberg Government covering Congress, Jonathan is on top of things for us here at Balance of Power. As we balance a couple of stories today, we'll let you know what happens when they emerge from that meeting at the White House. We'll talk again tomorrow about the legislative effort to keep our government running when lawmakers return. But we've also got something going on today in Michigan called a presidential primary, and this is a big Joe Biden story. Yes, of course, there's a Republican primary there. They're going to have a caucus this weekend, and Donald Trump's going to win it, and this is all we're hearing. But Joe Biden has got a very specific challenge going on right now, and it brings us back to his policy in Israel and Gaza. We've talked about it here before. There's an Abandon Biden campaign. This is a Democrat campaign in Michigan. There's also a Listen to Michigan campaign in which some folks like Congresswoman Tlaib are urging Democrats to vote uncommitted. And we wanted to talk to Caitlin Legacki about this, the partner at Four Corners Public Affairs, one of our Democratic analysts here on Balance of Power, former advisor, senior advisor to Commerce Secretary Gina Raimondo. Caitlin, it's good to have you back. How much of a liability is this for Joe Biden as opposed to a media sensation?
I think by and large, it's a media sensation. Obviously, Michigan is the one state where Biden's Middle East policy has the most opportunity to become an issue. But I think, you know, what the folks at the Biden campaign are going to do is they're going to look at what comes out of tonight and then view that as an opportunity to go out and identify the voters that they need to win back. And so it's actually a huge trove of data for them to go and understand what the state of the play is there. But no, I would also remind you that Barack Obama in 2012, when he was running unopposed, also got something like 12% in uncommitted votes. So I personally would be more concerned if he was losing 40% of Democrats the way that Donald Trump is losing 40% of Republicans to Nikki Haley. So, you know, I think they're going to be very measured about it over at the Biden campaign, and they're going to see what the data tells them and then go from there.
Well, it certainly does not seem to be a coincidence, Caitlin, that we got the news from Joe Biden that we got last evening. He talked about it a bit on Seth Meyers' TV show, but he was also asked by reporters while he's eating an ice cream cone about Israel. And the quote was pretty interesting as he suggests that there will be a ceasefire announced by Monday. He says his national security advisor tells him, quote, "We're close. We're not done yet. My hope is by Monday we'll have a ceasefire." Would he have said that yesterday if it weren't the day before Michigan?
Oh, I think he only said it because he was you know, he is the kind of guy that answers questions from reporters when they ask them. I'm sure that was not a planned, you know, release in an ice cream parlor from the White House. But no, you know, I think that the Biden White House has actually worked very hard to be very responsible about how they handled the situation. Really more a coincidence of timing than anything else.
Mm-hmm. Interesting line from Andy Levin, the former congressman. He used to come on this broadcast pretty often. Democrat, big Joe Biden ally. Helped him with Build Back Better infrastructure, the IRA, and all the rest of it. He is supporting the uncommitted campaign, and he says Joe Biden's problem is not a political problem, it is a policy problem. Caitlin, what does he mean by that?
I think that there are a number of Muslim Americans, especially in Michigan, who feel that the Biden administration has not done enough to advocate for the civilians in Gaza. That's what Congressman Levin means. And I think what it also means is that in order for the Biden campaign and the Biden administration to really communicate with these voters and show that they've been heard, it is going to require some sort of policy shift in terms of either walking a tougher line with Prime Minister Netanyahu, being more forceful about getting aid into Gaza, and supporting those humanitarian reliefs. And so I agree. You know, the fact of the matter is there are fundamental concerns within this community about how Israel is conducting itself in Gaza. And the Biden White House is going to have to figure out how do they address those concerns, make sure that civilians are taken care of, while also staying close enough to Israel to prevent this from spilling out into other countries in the region, which is really the biggest concern for a lot of folks.
Well, and I don't want to spend too much time on this, Caitlin, but when you talk policy, the public formal stated policy of this administration is that Israel's gone over the top, that there's that restraint should be part of the response here, that a proportionate response should be delivered. But we're not seeing it, of course. Should Joe Biden be punished for what Israel is doing without his approval?
I don't believe so. I also think that, you know, one of the hardest things in politics is to prove a negative. And what Joe Biden has done over the last, 5 months now, is really prevent a much uglier, much deadlier regional conflict from breaking out. I think that, you know, the Biden administration has shifted and they've strengthened their language as it comes to Netanyahu and how Israel is conducting the war in Gaza. But we also do have to remember that there are hundreds of Israeli citizens that are still being held hostage by a terrorist organization, and we do need to get them home as well. And so it's a very delicate balancing act to make sure that we get those folks home without incurring any additional unnecessary civilian casualties.
Yeah, well, the idea here would be that Israel halts the offensive in Gaza in time for Ramadan in exchange for, or as they say, if a deal is reached for the release of the more than 100 remaining hostages. That would be a pretty important moment. For Joe Biden, in the meantime, domestically here, Caitlin Legacki, what does he do in the days ahead? We're going to be counting uncommitted votes in Michigan tomorrow. That's going to be part of the narrative. Questions about his age, questions about whether he can beat Donald Trump in a general election. What's the strategy for the weeks ahead?
I think, you know, it's honestly keep calm and carry on. We have seen the economy continue to get stronger. The president and the White House are, again, the adults in the room when it comes to this looming government shutdown. They've been very responsible, very.
Another thing that startups need to look for is a market that is either started to undergo or is soon going to undergo exponential growth. I think this is actually related to one of the biggest mistakes investors make when evaluating startups. Investors always say, well, what's your growth rate? We care about the growth rate. Investors will forgive smallish revenue today if it's growing quickly. For some reason, people don't think about markets this way. But if you think about the most important startups, they are the ones that I start in small markets that are growing very, very quickly. 11 years ago, the market for iPhone apps was $0. It's now huge. And I think if you only think about the TAM today, you'll make a big mistake. What you really want to do is identify a market that's going to grow every year and be able to ride that up elevator.
Speech, be honest about it. I feel like it would be embraced. Caitlin, it's great to see you. Legacki, normally with us on our panel, we wanted to drill down on what was happening in Michigan today from Four Corners Public Affairs. Great insights as we head next to our conversation with Nathan Dean from Bloomberg Intelligence on the odds of a shutdown. It's next on Bloomberg.
From the UK, and I'm the inventor of the gel razor. And today I'm looking for an angel investor to fund my project, the gel razor, whether that's a working concept and working prototype, or manufacturing possibilities with investment, or to get me a licensing deal secured. If you go in any supermarket today, you will see packets of razors sold separately with tins of mousse or gel. Hence I developed the all-in-one. The idea is you pressurize the handle. The gel flows through the reservoir up to the head of the razor, coating the blades, ready for shave. My target market is 18 plus, male or female, male blue version, female pink version. What I'm looking for in an investor is someone who's passionate, determined, shares my vision. That's an important step for me, and willing to succeed as I want it to succeed myself. Patented in the UK in 2021 September with copyright protection. I have a logo for the gel razor, which you will see on my LinkedIn profile. Currently working with a company in the US who have done me a lovely sell sheet. Big up to them guys. So if you're interested, contact me on LinkedIn profile, Paul J. Gwilt, GWILT, or email me at mufc219@gmail.com.
It's 12:20 on Wall Street. We do check markets all day long here at Bloomberg. We have got stocks trading mixed. The Dow, the S&P, they are both lower, retreating from records. We have got NASDAQ advancing 26 points, now at 6,002, up by about 0.2%. The 10-year, 4.29%, with the 2-year that's yielding 4.69%. Spot gold, a little change, flat on the day now at $2,030 the ounce, while West Texas Intermediate crude up 1.1%. $78.43 for a barrel of WTI. Bitcoin, big story today, 57,218 on Bitcoin right now. Bitcoin up by 4.7%. Viking Therapeutic shares are surging by 90% after the company said its experimental obesity drug delivered positive results in a mid-stage trial. San Diego-based Viking said patients lost as much as 14% of their body weight after receiving weekly doses of its shot called VK2735 for 13 weeks. Eli Lilly, maker of the Zepbound weight loss injection, is trading lower by 0.7%, while Wegovy maker Novo Nordisk is down 1.4%. Again, Viking shares, they're up by 90%. Recapping, S&P holding on to a gain now of 15 points. We've got the S&P and the Dow both trading lower, with the S&P down 6. I'm Charlie Pelleton, New York. Balance of Power continues. Once again, here's your host, Joe Matthew.
All right, Charlie, we thank you. Welcome to the Tuesday edition of Balance of Power. I got my days straight here in Washington, D.C., straight with Nathan Dean, who joins us from Bloomberg Intelligence, our senior government analyst. We wanted to drill down with Nathan, as we do each week at this time, if not the exact odds of a shutdown, what we can expect, what to watch here, maybe what the menu of options are for Speaker Mike Johnson, because Nathan has a way of reading the tea leaves that makes him special. It's good to see you, Nathan Dean. Thanks for coming over. We've got a State of the Union next week.
Yep.
Mike Johnson really going to let this happen with Joe Biden coming over?
No, look, there's a lot of scary headlines going around right now, but I think they're going to come to a deal. And that deal could look several ways. One, they could kick the can for just, say, a week, and they need more time to come up. Because remember that when the House comes back, there's not 72 hours that they can read legislation and get that to the president's desk and so forth. So there could be a kick the can. There could be a kick the can to March, and they could say, look, we're just going to fight this out, or in April, and we'll say that we'll do this before the sequester, because that's what we're telling our clients is the April 30th date, where there's a 1% sequester on everything, including the Department of Defense. That's the date where we think that Ukraine aid and funding will come into play, and then some serious choices are going to be made here. But for this scenario, for this weekend, this is Speaker Mike Johnson's decision. Mm-hmm. Am I going to partially shut the government down? Am I going to allow President Biden to stand up in the State of the Union address and say, this opposition party is the one that's causing angst here? I don't think so. So I think that, he's going to obviously deal with this motion to vacate issue, but we've seen this before, and Congress is great at kicking the can. And I think that's what we're going to do one more time.
So despite all the vows from Mike Johnson himself, from Tom Emmer last week here on Bloomberg, there will not be another CR. You're saying there will be.
Well, he called their bluff. He already did it once. And, if you do it twice, then you get a motion to vacate. And look, nobody wants to go through a motion to vacate process on the Republican Party, except for maybe 5 to 10 members.
Right.
Because it took 3 weeks before they went through Scalise and Jim Jordan and all these folks. Who do they have, that they're going to put up? So, the issue that we have from a congressional and specifically from a policy point of view is that we're in late February, and there hasn't been much passed in terms of like crypto legislation or climate change legislation. There's a lot of stuff that's out there that's more minor and technical that's waiting for these macro issues to get out of the way. And I think a lot of people just want to say, look, I don't care about this. Just resolve it. Let me go home to my districts and say, I want to focus on the election instead.
Menu of options then, CR, we've discussed that, says vowed not to do it, most likely in your opinion. Let the government shut down, or something dramatic. You actually bring the Senate bill to the floor.
It's feasible.
Let it go down. Let them vote it down.
It's feasible, but I think in terms of optics right now, the easiest thing for Speaker Mike Johnson to do is to just, he's meeting with the others, Senator Schumer, Senator McConnell, and Hakeem Jeffries, and the president, and so forth like that, is to come up with some type of, easy deal to just kick the can a few weeks. Don't really make any dramatic events or catalysts or anything that really changes the political calculus here. And instead, just go back to that tried and true playbook of kicking the can. If there's a motion to vacate issue, then we've heard statements from moderate Democrats saying that they would be willing to help Speaker Johnson.
That's right.
Obviously, there's a huge caveat. What does he give him in return there? Sure. But, it's one of those things where I think he can call their bluff again.
Amazing.
And, we'll probably have to be a different conversation in April with that sequester. But for right now, I think markets can breathe a little.
The option that I suggested, by the way, you bring the compromise bill to the floor. He'd have to do that under suspension of the rules, it would have to pass with Democrats. That would get him fired. We can agree on that? That's just, you're not crossing that line.
Yeah, it's something where I just don't think it's a risk that he needs to take at this point, because there are other ways that he can go about doing this.
You keep mentioning April. This is extremely important. The 1% cut across the board, the wonks call it a sequester. That's the 30th of April. Right, so whatever they agree upon for a short term's got to end before that, because if we're crossing that line, that's going to start a massive war on Capitol Hill.
Yeah, and we're primarily looking at the Department of Defense here. I mean, apologies to all the other agencies, but it's the Department of Defense that really people care about.
Homeland Security, though, could play into that, right?
Exactly.
With the border?
But with the Department of Defense, you have a lot of bases in rural locations and so forth. So you could have members who say, look, I want a government shutdown. I want to cut spending. Oh, wait, you're going to cut spending from the one base in my district? No, I don't like that. So, but the problem is that, I think if you were to give the majority of people on Capitol Hill truth serum, they would say, look, we're just going to resolve this. We will put the Ukraine funding out there. We'll get it done. We'll focus on the election. But logistically, they're going to have to go through these motions to try and figure out, okay, how can we get the bill through this, through the House? How can we get the bill through the Senate? How do we placate these 5 members here? And that's where the true risk is the logistical headaches of trying to get these bills through. In just all of a sudden, you have these long threads from Chip Roy on Twitter or X saying that we're going to come after you if you do this.
I was enjoying. That's quite a read here. What's the status? He says. Short answer: no plan to fight. He kind of epitomizes the problem that Mike Johnson has in the House, right?
Yeah,
he's
absolutely.
the face of it.
I mean, but there are only 5 to 10 to 15 of those members out there. But the problem is he can't lose them. So, but this is what we've told our clients over and over again. Even if you go back to the Speaker Boehner era, any type of situation like this with the shutdown, they get to a point where they have to pass this through Democratic votes, because the party that is seen being shut down or shutting down the government, in this case it would be the Republicans, pays a political price. Right. And nobody wants to pay a political price 5 days before the State of the Union in an election year when margins of votes in this election are going to be so tight. Look, I don't think there's going to be people walking into booths in November saying, I'm going to vote for the Democrats because they partially shut the government down in early March. Yeah. But the margin of vote is so thin on many of these races, even incremental, reasons like this. You don't want to give the other party that. So I think that they'll come up with a deal. They're going to, probably stick their, hold their, noses while they're doing it. But I do think they'll kick the can to April.
We're spending time with our friend Nathan Dean from Bloomberg Intelligence, the senior government analyst. Your phone rings about a lot of different things here. Let's stick with this State of the Union theme for a moment. We're a week out almost now. Typically, you start hearing news bubble up that weekend beforehand. He's going to want to make a bunch of announcements that night. What kind of news will be coming out of the agencies in the White House in the next week?
So there's really 2 things we think. One is junk fees. President Biden has had multiple executive orders on his ability to combat junk fees. And this is at the FTC and the CFPB, the Consumer Financial Protection Bureau. There is a bill out there, or a regulation out there, that's CFPB that I think they could finalize next week. And they're super secret about this, so they haven't announced it yet. But, this would be lowering credit card late fees. Right now, they're around $30. They would lower it to $8. That's one of the junk fees. The other thing is over at the SEC. There's lots of rumors going around town right now that the SEC wants to finalize their climate change disclosure rule on March 6th. Now, and this is where I think Senator Elizabeth Warren may not to be happy with the SEC. Bloomberg Law has done some great reporting that this rule, which requires all 6,900 public filers to disclose their climate change risks, there's this thing in there called Scope 3, and this is the climate change risk of their supply chain. So if you're a big conglomerate, all 10,000 of your suppliers, you have to identify their climate change risk. We've heard that's been pulled out.
Wow.
And that is going to raise the wrath of Elizabeth Warren. That's going to raise the wrath of a lot of progressives up on Capitol Hill. So this is something that Chairman Gensler is probably, look, I don't think he loses sleep about anything, but I think this is something that Chairman Gensler could potentially be losing sleep over in advance of Wednesday.
Elizabeth Warren, for what it's worth, is going to be with us on Balance of Power, the later edition at 5 p.m. Eastern Time. Would love to ask her about this. If that happens, Nathan, do you see progressives sitting on their hands when the rest of the room is standing up? for Joe Biden?
I don't think so. I mean, ultimately, the race this November is a race between President Biden, the presumptive nominee in our view, President Trump, and people not voting.
Have you called the presumptive at BI, or you're just saying that anecdotally?
No, anecdotally. Okay. I mean, but what we're telling our clients is, look, Nikki Haley, obviously, I don't think has a path to winning states. Will we get to a convention? Will there be a contested convention? Anything's feasible. Mm-hmm. But in terms of trying to prepare for the election, what we're telling our clients is the best thing to do is prepare at the President Biden level, prepare for the President Trump presidency, and then we can look at their policies, look about how they're going to implement these policies. Like in Trump's case, executive orders on day one.
Right.
The regulatory agencies will take probably the second year will be a regulatory issue. And because most presidents in their second term spend the last year 3 and year 4 focused internationally because they've used up political capital, trade and tariffs and foreign policy and so forth. So, that's one of the things we're just working with clients on is how do you prepare for these presidencies? And look, if something happens and Nikki Haley is now the nominee, we'll deal with it then.
Wow. You just take phone calls, you do Zoom calls with the clients?
Zoom calls. We have a Monday.
Is that right?
Every Monday at 10 a.m. we have a Zoom call. Lots of calls with clients and, anything we can do to assist with.
I've long said it's like the coolest thing Bloomberg's got going. Bloomberg Intelligence. He's the senior government analyst here in Washington. That's Nathan Dean, our friend, known to some as Dad around here. Great to see you, Nathan. Thanks for the setup. As always, gives you a sense of what to wait for, what to look for in the next week as we try to clear through the clutter and get ready for the State of the Union that we'll, of course, bring to you with special coverage here on Bloomberg. Let's get up to date now before we assemble our panel. Rick and Jeannie are next. First, Nancy Lyons in the Bloomberg 99.1 newsroom. Hi, Nancy.
Hey, Joe. Voters in Michigan are going to the polls in that state's primary today. While Donald Trump is expected to win on the Republican side, Nikki Haley has vowed to stay in the race until at least Super Tuesday. President Biden, meanwhile, does not have a major primary challenger in the Democratic contest, but he does face headwinds, with Arab American activists rallying voters to write in uncommitted to protest the president's handling of the Israel-Hamas war. As for the ongoing effort to reach a temporary ceasefire in that war in order to release hostages, President Biden says it could happen before next week. He reiterated that hope on NBC's Late Night with Seth Meyers.
Ramadan's coming up, and there's been an agreement by the Israelis that they would not engage in activities during Ramadan as well, in order to give us time to get all the hostages out. That gives us time to begin to move in directions that a lot of Arab countries are prepared to move in.
U.S. Western and Arab officials hope that a fresh ceasefire and hostage exchange could mark a new phase in the war, creating momentum for a longer-term arrangement. Another hearing is set for this afternoon in Georgia in connection with the relationship between Fulton County's district attorney and the special prosecutor for former President Trump's election interference case. The former law partner for special prosecutor Nathan Wade is being compelled to testify about when Wade's romantic relationship began with DA Fani Willis. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. 12:40 now on Wall Street. We've got the Dow, the S&P, and now NASDAQ in the red. Stocks lower across the board, with the S&P down 7, a drop now of 0.1%. The Dow down 174 points, lower by 0.45%, whereas NASDAQ, the composite index, lower, now little change, down by 2 points. The 10-year at 4.30%, with a 2-year that's yielding 4.69%. Spot gold flat on the day at $2,030 the ounce, while West Texas Intermediate crude up 0.9%, 78.27 a barrel on WTI. Bitcoin up 3.9% right now at 56,783 on Bitcoin. So stocks lower across the board. In the meantime, sources say Warner Brothers Discovery has halted merger talks with Paramount. That, according to CNBC, a combination of the companies would unite famous Hollywood properties, including the Paramount and Warner Brothers film and TV studios, and put a number of pay TV and broadcast platforms such as HBO and CBS under a single roof. Warner Brothers up 0.8%, Paramount up now by 0.9%. The Boeing 737 MAX crisis hammered factory orders for durable goods, and with that story, here's Bloomberg's Vinny Del Giudice.
January durable goods orders dropped 6.1%, the most in almost 4 years. Commercial aircraft orders plunged following a near-fatal accident involving a Boeing jetliner. The aircraft manufacturer reported just 3 orders last month. Aside from commercial aircraft, the factory numbers are lackluster. A gauge of business investment posted only the 3rd increase in 6 months. Vinny Del Giudice, Bloomberg Radio.
Briefly, Capital One says Discover fixes could cost more than expected. Stocks lower, S&P down 7, down 0.1%. I'm Charlie Pellet in New York. Balance of Power continues. Once again, your host, here he is, Joe Matthew.
Hey, Charlie, thank you. We'll get back to Charlie a bit later on this hour. Check on trading for you as well. We're talking politics. We always have an eye on Wall Street. This is Bloomberg. Thanks for being with us on the radio, on the satellite, and on YouTube. Go to YouTube right now. If you can join us in the studio, search Bloomberg Global News, and you'll find our live feed there that runs throughout the day with all of our shows on Bloomberg Radio. Happy primary day. As we bring our panel in, we remind you they're voting today in Michigan. And in this case, Donald Trump and Joe Biden have something in common. They're both expected to win their respective primaries. Yet we're all watching Joe Biden a little more closely than we are Donald Trump, where this does seem to be inevitable to most at this point, and he will likely win Michigan by a 5 or 6 point margin based on polls. Joe Biden, on the other hand, should win by a long shot. The question is, how many will vote uncommitted? With you've got an abandoned Biden campaign and a separate Listen to Michigan campaign, fueled by progressive anger over what is happening in Gaza. And they do not think that the president has done enough for them. That's where we start with Jeannie Shanzano and Rick Davis, Bloomberg Politics contributors. Happy Election Day to both of you. Jeannie, we talked about this a little bit yesterday. Listen to Michigan says it contacted 100,000 voters, but learned in talking with them that they will not likely vote uncommitted. They'll just stay home. Is that Joe Biden's worst nightmare this year?
Yeah, I mean, either way, you don't want them uncommitted or staying home. And, I think, part of this is that a large part is obviously in reaction to what's going on in Israel and the Biden administration's support of Israel. But it goes even beyond that, which is a concern to the campaign, which is the fact that this includes not just Arab and Muslim Americans, a big contingent in Michigan, but young people of color. And of course, they are expressing concerns, progressives, they are expressing concerns about Gaza, certainly, but about voting rights, about the economy, about inequality, promises that they say Joe Biden made and didn't deliver on. So that, I think, is a broad part of this concern. And of course, the campaign has got to own the fact that this is a problem when you don't stay in touch with important constituencies. They have felt ignored, and so they are now saying, you will ignore us at your own peril because we will fight back, and they're going to fight back today. We don't know how large numbers, but they are trying to fight back and say, don't ignore us or take us for granted.
Well, it seems they are not, having had a series of meetings with some pretty high-level campaign officials. The Deputy National Security Director was out in Michigan, as we discussed, Rick, a couple of weeks ago. Joe Biden's not been to Michigan since the 1st of February. I don't know how worried he is about this, but I'm trying to figure out if this is a primary sensation or a real issue potentially for Joe Biden in the general election, where our polling at Bloomberg shows him losing the state of Michigan.
Yeah, I think that his losing the state of Michigan, frankly, was a problem long before the October 7th attack on Israel from Hamas. So I think that fundamentally we have to look at Michigan as a state that probably will be decided by less than the 150,000 votes that Biden won it in 2020, but arguably will be between now and Election Day a very close and very key targeted battleground state. So to make any conclusions other than that right now, I think is really premature. I mean, to say that you called 100,000 people and they don't want to vote in the Michigan primary, most people don't want to vote in a Michigan primary, either Republican or Democrat. And so arguably, I don't think that has much bearing. And I think you're right, Joe. I think the White House has done everything they could, normally do to try and manage the situation on the ground with Arab American voters in Dearborn, Michigan, right? He's going to win Wayne County, which has Dearborn as one of its counties or one of its towns at, in excess of, 60%. So, that's kind of baked in the equation. So it's what Jeannie was saying. It's just margins of error right now. And arguably, the only thing that can be done to mollify this community is to get a ceasefire in Israel, in Gaza, and hope that this falls out of the headlines between now and November. And I have absolute confidence that that is the strategy that the White House has. So I think this is a good chance for this community to be heard. But after this, I have no doubt that if Biden has his way and he's able to hit these milestones, he'll have the vast majority, if not all, the Arab American vote in Dearborn, Michigan, voting for him in November.
So listening to Joe Biden yesterday, not a coincidence then, Jeannie? We're close. We're not done yet. My hope is by Monday we will have a ceasefire. Did he need to say that yesterday, or he said it because it was the day before Michigan?
He needs to say it. He needs to tell us what is going on. I do not think he needs to say it while he is eating an ice cream cone in sunglasses. I do not understand why they did that. That is hardly the presidential look that you want to put forward. So I have a problem with the way that they did this. The message is important. He needs to tell us what is going on with these negotiations. The reality for Joe Biden is this is a reflection of how difficult it is to run when you are the incumbent. Because, the way that we talk about it a lot of times media-wise is that, if he doesn't mollify these people, he'll lose this vote. But the reality is there's a significant support for Israel and Jewish voters and others in Michigan who support the president's policy. So if he simply flipped over, theoretically, he may lose their support. So it's not easy for him to balance. But this is where I go back to. You have to be in constant conversation with these constituencies to mitigate that risk. And I don't think the administration has done that to the degree they need to. And evidence one of that is the mayor of Dearborn saying, you sent us political people out here to talk to us. We want to talk to policy people. So these things do matter to these groups, and they've got to be.
It's back to this idea that it's a political problem and not a policy one. Sorry to interrupt, Jeannie. That was the line from Andy Levin, the former Democratic congressman. Rick, we're out of time here, but is Joe Biden wearing sunglasses, eating ice cream, talking about a ceasefire, the equivalent to George W. Bush? Now watch this drive.
I think Dark Brandon should never take his sunglasses off. I mean, this is the fighting Joe that we need to see to make this an interesting race. And I would drop the cow cream. I think that's a bad lesson for our youth. But keep the glasses on. Ray-Ban sell.
Rick Davis, Jeannie Shanzano. For the young people, go Google Now Watch This Drive. You'll know what I'm talking about. More with the panel next. Rick and Jeannie on the dysfunction in Congress. They're meeting right now at the White House. This is Bloomberg.
Your company news headlines on Bloomberg Radio.
From Bloomberg World headquarters, I'm Charlie Pellet. Do want to begin with a developing story headline right off the Bloomberg Professional Service. Klarna Bank, that is the Swedish fintech that was once Europe's most valuable startup, is moving forward with plans for a potential U.S. listing that could be one of the largest listings this year. According to sources, it could be a $20 billion value listing. Other stories that we're following this morning: Intuitive Machine shares are extending declines linked to concerns that the spacecraft company's lander, which touched down on the moon last week, likely landed on its slide. Lunar shares, LUNR, is the ticker for the company. Right now, it is trading lower by 11.2%. Lowe's said its sales will fall further this year as consumers continue to hold off from sprucing up their homes amid higher mortgage rates and a drop in new construction projects. Lowe's shares, they're up by 2.5%. Rival Home Depot up by 0.8%. Macy's plans to close almost a third of its namesake U.S. locations. With more, here's Kimberly Adams.
Charlie, Macy's didn't give an estimate of the number of employees that will be affected by the closures, though it said in a filing that it would take a $50 million charge related to employee termination costs. Many of the stores are near other Macy's locations, which could allow some workers to transfer. Macy's also plans to add 15 new Bloomingdale sales and 30 Blue Mercury locations by 2026, an effort to accelerate growth of its higher-end brands. The announcement, accompanied by fourth quarter results, follows a $5.8 billion buyout offer from Arkhouse Management and Brigade Capital Management in December. Macy's rejected the offer, but last week, Arkhouse nominated 9 directors to Macy's board as the activist investor persisted in its efforts. Charlie?
Bloomberg's Kimberly Adams.
This is Balance of Power with Joe Matthew on Bloomberg Radio.
As we spend time with our panel, Rick Davis and Jeannie Shanzano, they have emerged from the meeting at the White House. The meeting of the minds has come to an end. That started at 11:30, so not too bad. Made it almost 90 minutes here. Speaker Johnson, the Big Four, as we call them, Schumer, McConnell, Jeffries, all in the Oval with not only Joe Biden, but Vice President Kamala Harris. And they're going to do the dance now with reporters in the driveway. This is how we try to figure out what the heck went on inside the room. Democrats come first, in this case, Schumer and Jeffries at the stakeout. And when Mike Johnson comes out, we'll be listening very closely for messaging as to what happened in the room. Jeannie, I don't know if you're hopeful here, but we're dealing with two different issues, a potential government shutdown on Friday and funding for Ukraine and our allies, Israel and Taiwan. Do you see this meeting as an important stop on the road, or this just gives everybody an excuse to shout at reporters when they emerge?
Yeah, I think personally the latter. I don't expect it would have been particularly productive. Everybody knows what needs to happen. They need to get a bipartisan coalition together, and Republicans need to allow these bills to go forward in the Ukraine, the foreign aid to get a vote, and obviously keep the government funded. If they can't use that bipartisan coalition because he's worried about his job or because of Donald Trump, then the government is going to get a partial shutdown by the end of the day on March 1st and a full one by the end of the day on March 8th.
I won't ask you what they accomplished because we don't know yet, Rick, but how important is this dance that we're all going to witness here in the West Wing driveway outside the portico?
Look, I thought Caitlin Vacchi said something in the earlier part of this program, which I thought was really smart, and that is that here is Speaker Johnson with no other friends in the room. Everybody in that room, the president, the vice president, the majority leader, the minority leader of the Senate, the minority leader of the House, all of them are on the same page as to what to do on the budget, what to do in Ukraine, what to do with Israel. And that guy is all by himself. And isolating him like this can produce results. Nobody wants to be the odd man out.
And so you agree then, Rick, that Mitch McConnell is part of this? He's marginalizing his Republican ally next door. Or maybe I shouldn't call him an ally.
Yeah, I think that Mitch McConnell has been very clear where he stands on this. He produced a bipartisan bill that had a great amount of legislation to close and manage the southern border, in addition to fully funding the needs of Ukraine. And that was a signature bill for him. He wanted that to pass. And the fact that the speaker, his partner, as you say, next to him, said that was dead on arrival, did not sit well. Now, I would say Speaker Johnson in that meeting was dead on arrival.
Hakeem Jeffries, quote, really optimistic we can do what is necessary within the next day or so to close down these bills and avoid a government shutdown. Jeannie, that sounds like actual budgeting, not a CR. How would you read into that?
It does sound like that. I would be surprised. I mean, if we don't see language today, it's hard to imagine that they get the 3 days they need to get this done. But, hopefully for all of our sakes, he is right. I mean, everybody agrees we should not be shutting down the government. We all know what the problem is. We need to have the Republicans in the House move this forward without fear of retribution from the far right flank or from Donald Trump, more importantly. And that's really what's going to break this thing wide open and allow us to move forward.
He goes on to say extending bills that are scheduled to lapse on March 1 so that good faith negotiations can continue. This is an existential moment for the free world, reminding us they were speaking about not only avoiding a shutdown starting at the end of this week, but providing emergency funding for our allies. We're going to have a lot more on this, including with our panel coming up in our next hour. Kaylee Lines joins the conversation. And we'll have more ahead, as I mentioned. Rick Davis and Jeannie Shanzano, Bloomberg Politics contributors, and our signature panel here on the fastest show in politics. We're glad you're with us on the radio, the satellite, and YouTube. We'll add TV next because Hour 2 of Balance of Power starts right now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
The meeting of the minds has ended. Will we avoid a government shutdown, though? Welcome to the fastest show in politics. As the Speaker of the House and other congressional leaders emerge from a meeting with President Biden inside the White House, the Vice President as well. I'm Joe Matthew alongside Kaylee Lines in Washington. And Kaylee, we're reading the tea leaves here. It'll take us a moment to figure out if they made any progress in this meeting.
Absolutely. Of course, we've heard from the Senate Majority Leader, Chuck Schumer, as well as the House Minority Leader, Hakeem Jeffries, both describing a productive and intense meeting, although we did hear from Jeffries making real progress on the appropriations bill scheduled to lapse on March 1st because, of course, avoiding government shutdown, one part of the conversation they were having today, the other being on supplemental funding and aid for Ukraine, as well as the border. Interesting to hear both Democrats bringing up the border issue, Jeffries calling it a broken system, Schumer saying they made it clear they want to do something on the border. And we know Mike Johnson has had a lot to say on that issue, too.
An existential moment for the free world. This is an interesting bit of choreography. We've seen the Democrats emerge from the meeting. Republicans are expected at least to follow. Kaylee, based on the analysis that we've been hearing from our own team here today, I'll be curious to see if Mitch McConnell actually comes out with Mike Johnson, who might have felt very lonely in that room today.
Well, keeping in mind that Mitch McConnell, together with Democrats, including the president, has been very vocally in support of aid for Ukraine. He was a proponent of the deal that was struck and very quickly killed to tie aid to Ukraine to border security measures. Mike Johnson, though, declared that dead on arrival in the House. It does seem that the Republicans may not be as aligned here as in other examples in the past.
We're going to get into this coming up with Rohit Kumar, who used to work for Mitch McConnell, to give us his behind-the-scenes view. Of course, now at PwC. And Gregory Cordy is going to drop by. It's primary day. Happy primary day. We're going to take a look at Michigan. Not only for the Republican primary, but Joe Biden's got some challenges that he's dealing with that we're going to get into over the course of this hour as well. So let's get it on. Fastest show in politics.
Fast indeed. And of course, we're quickly tracking the financial markets always here at Bloomberg. At least Charlie Pellet is. Let's get over to Charlie in New York. How's it going?
Thank you very much. And right now, certainly we've got Wall Street keeping a very close eye on developments out of Washington. We've got you covered here on Balance of Power. The S&P 500 index very close to session lows right now, down 7 at 5,061. That is a drop of just about 0.1%. The Dow now down 161 points, down 0.4%. The Nasdaq Composite Index down 14, a drop there of 0.1%. 10-year yield 4.29% with a 2-year that's now yielding 4.69%. Spot gold up 0.1%, little change to 2,033 the ounce. Crude oil up 1.4%, 78.61 a barrel on WTI. Bitcoin surging today by 4%. Bitcoin right now at 56,869, was trading a little earlier on with a 57,000 handle on Bitcoin. So stocks lower across the board. Keeping an eye on Car Guru shares, they are down roughly 5.5% after the online auto marketplace gave a first quarter forecast that was weaker than expected. Other car sellers, though, a very different picture. Carvana surging by 15.8% right now. And also we've got CarMax. It is up by 3.8%. So again, recapping, stocks are lower. Red on the screen right now. S&P 500 index down 7, a drop there of 0.1%. I'm Charlie Pellet in New York. Balance of Power continues. And once again, here they are, Kaylee Lines and Joe Matthew.
All right, Charlie Pellet with a look at what's happening on Wall Street today. Thank you so much. Meanwhile, as we check in on what's happening at the White House, apparently not Senate Minority Leader Mitch McConnell speaking, because according to Bloomberg reporters, Joe, he is back at the Capitol after the meeting with the other big three congressional leaders and the president. He says the main thing that was discussed in that meeting was keeping the government open, and he says we're making real headway on the appropriations process. But I guess he didn't want to stick around and go to the sticks.
This is fascinating.
Everybody else.
The optics here are not great. This is the meeting to solve problems. And of course, we saw the two Democratic leaders emerge in sync, showing unity. Not so much on the Republican side. I don't know if we can show this live view of the door at the West Wing. This is the portico leading to the driveway where they emerge. There we are. There are still a bunch of reporters out there with microphones in the hopes that somebody comes out with an R after their name. But I'm guessing Mike Johnson is probably not hanging out at the White House at this point either. If he emerges, we'll let you know. But the symbolism here is something, Kaylee.
Yeah, it absolutely is, knowing that this probably was a pretty difficult meeting for Mike Johnson, and he is taking the other side on many issues than the other three congressional leaders in that room, and certainly the president. But he did say at the Capitol earlier that he did not think the government is shut down, that they were going to try to act to avoid that. It's just a question of how exactly that gets done, when he previously said no more continuing resolutions. Maybe perhaps it would be minibus, but we're working with a limited number of days here.
And very limited number of options. All the while, we've got an eye on Michigan for you. We'll let you know what happens at the White House here, and if that door swings open, somebody of interest emerges here. Joe Biden's watching Michigan. We already know that there's a Republican contest there, and that's been getting a lot of publicity. Joe Biden has a problem with Arab American and Muslim American voters that could actually show up in the numbers today. Whether this remains a primary phenomenon or bleeds into the general election, it's something that, of course, is tied directly to the president's policies in Israel and Gaza. And we're joined to talk about this by Gregory Cordy, Bloomberg News White House and politics reporter. It's good to see you, Gregory. A lot of folks are kind of turning their attention away from the Republican contest at this point after the sweep of really states by Donald Trump. What are we going to look for tomorrow? You get 10,000 uncommitted votes for Joe Biden. Does it actually bring a meaningful impact to his campaign?
I'm not sure that it does. You know, there's always going to be sort of straw polls on either side, especially as we get in beyond. It looks like Donald Trump has secured the Republican nomination in all but the math at this point. And clearly, as the incumbent president, Joe Biden is going to be the Democratic nominee, barring some unforeseen circumstance.
They have this in common.
And and so all of these contests going forward there's going to be a lot of gamesmanship and a lot of spin and a lot of punditry about who got more votes than the other guy and what that says about enthusiasm. Both of these candidates have an enthusiasm problem. We just saw in South Carolina, 40% of Republicans in South Carolina voted for somebody other than Donald Trump. And that's not enough for Nikki Haley to really continue to mount an energetic campaign, but it's still a problem for Donald Trump. And similarly, if we see large numbers in Michigan tonight of people voting for uncommitted, basically none of the above on the Democratic side, in a protest vote against Joe Biden, that's a problem. I will say so far, we've been looking for that in New Hampshire when we were there. We didn't see it. We were looking for that in South Carolina in the Democratic primary. We didn't really see it. We still saw pretty good turnout, especially among black voters in South Carolina, for Joe Biden. So we'll have to see what the returns look like. And then, but I would also sort of caution against overanalyzing what's really sort of a one-time protest vote.
Well, Gregory, we have to go over to the White House now because House Speaker Mike Johnson has just emerged from the West Wing after meeting with other congressional leaders. We've already heard from Chuck Schumer and Hakeem Jeffries, but here is the House Speaker.
Let me say this. When I showed up today, my purpose was to express what I believe is the obvious truth, and that is that we must take care of America's needs first. When you talk about America's needs, you have to talk first about our open border. I've been, I believe, in maybe 20-something states over the last several weeks, going around the country, appearing at events with my colleagues, and we're hearing from the American people of all parties and all persuasions in all cities and all states who feel this acutely. They understand the catastrophe at the border is affecting everyone, and it is top of mind for all the American people for that reason. So I brought that issue up repeatedly today in that room and again one-on-one with the president. I think that's our responsibility. To bring that up. The other big priority for our country, of course, is the funding of our government. And we have been working in good faith around the clock every single day for months and weeks and over the last several days, quite literally around the clock, to get that job done. We're very optimistic. I hope that the other leaders came out here and told you the same. We believe that we can get to agreement on these issues and prevent a government shutdown. and that's our first responsibility. You also heard, I'm sure, that there was discussion about the supplemental spending package, and I was very clear with the President and all those in the room that the House is actively pursuing and investigating all the various options on that, and we will address that in a timely manner. But again, the first priority of the country is our border and making sure it's secure. I believe the President can take executive authority right now today to change that, and I told him that again today in person, as I've said to him many times, publicly and privately over the last several weeks. It's time for action. It is a catastrophe, and it must stop. And we will get the government funded, and we'll keep working on that. So we'll have more for you soon.
So very short remarks from the House Speaker, Mike Johnson, after this meeting, not just with the other big congressional leaders at the White House, but afterward, a one-on-one sit-down, Joe, with President Biden himself, in which the House Speaker said he brought up the issue of the border. He says America's needs need to be put first, have to have an open talk about the open border. He says the other big priority is funding of the government. And he also echoed the optimism we heard from Chuck Schumer and Hakeem Jeffries that he does believe we can get to an agreement to avoid a shutdown. Of course, the partial shutdown would begin this Friday.
Well, so everyone said what they needed to say. I still don't have an idea of how that went in there. I have to be perfectly honest with you. Mitch McConnell left him alone.
Yeah,
I don't.
went back to the Capitol.
This feels a little bit weird to me. Thanks to Gregory Cordy. I'm sorry that we got interrupted in our conversation as we bring in Rohit Kumar, principal co-leader of the Washington National Tax Service at PwC. Spent some time, in fact, a good chunk of time working for Mitch McConnell, and can help us understand the behind-the-scenes conversations that are happening when deadlines are approaching and deals are being made or not. In the case of today, Rohit, it's great to see you. You surprised your old boss went back to the Capitol on his own today. Does that tell us how much ground there is between these two, the gap between these two Republicans when it comes to the matter of Ukraine?
So not particularly surprised, because the gap was known going in. And look, I hate to burst anybody's bubble about what happens in these meetings, but I participated in probably several dozen Oval Office meetings during my time working on Capitol Hill. I can't remember a single one where I felt like we really advanced the ball. Like we walked to that meeting, we're like, wow, we really achieved something today, right? It just tends to be the same talking points you see on the House and Senate floor, transmitted in private, in the Oval Office. No one's going to make a big concession in that room. Those breakthroughs, those negotiation breakthroughs, they happen in smaller rooms, in one-on-one negotiations, typically in the Capitol, not in the Oval Office. So every Oval Office meeting I went to was just like an hour or two of couldn't have my phone, was going to be horribly behind on email, and we would just read our talking points to one another and then go back and, get back to the real work.
Well, Mike Johnson suggested that work to avoid a shutdown has been happening around the clock, even though the House isn't even back in session yet. They all return tomorrow, at which point there will be about 72 legislative hours left to avert a shutdown. Do you believe their optimism on the idea that they're getting close to something that would avert a shutdown?
Yeah, so that optimism is actually it's consistent with what I've been hearing in my own conversations, which is that they're really on the first, or you're going to have a temporary continuing resolution. And I know in the past the Speaker has said no continuing resolutions, but yet we still have managed to do them in one form or another. And I think, look, at root, everyone understands that nothing is achieved by a shutdown. I have been a part of a number of shutdown exercises. I've witnessed them from afar. I can't think of a single one where, as a result of the shutdown, somebody got something that they weren't going to get already, that they somehow gained leverage in the negotiation. In fact, if anything, in shutdowns, especially the ones that go longer than a couple of days, you tend to lose leverage. You end up getting less than you could have gotten on the front end, because the shutdown is a self-inflicted political injury. As my old boss, Senator McConnell, has said repeatedly, Republicans kind of own the brand on shutdowns, and not to their advantage, but largely to their detriment. And so I think most people understand, not all to be clear, but most understand that you actually don't get much out of a shutdown, and if anything, you might lose something.
Rohit, having been in the room for a couple of these, to your point, as the Deputy Chief of Staff to the leader, Domestic Policy Director, you're giving us a sense of what you made of the language coming out of this, but I wonder your thoughts on what the real priorities were. Mike Johnson came out first and foremost talking about the border. Was this a meeting about Ukraine or about a government shutdown?
look, I mean, once you're in the room, you're talking about everything. But at some level, no huge surprise that Speaker Johnson would come out and talk about immigration and talk about the border, right? All the sort of public polling would suggest that immigration is top of mind for voters. So that makes perfect sense. It's something that Republicans have cared deeply about for, this is not like a new revelation that Republicans care about this issue. And so what that tells me is, look, of all of the things that are floating around in the government funding conversation, immigration is where Speaker Johnson is kind of, putting his chips in the middle. And so I would be looking and paying attention to what, if any, concessions are made, negotiations are had around immigration, whether that, and interestingly, he particularly called out the president and the ability for the president to engage in his own executive action, something which has been clearly, it's been reported that the administration is considering anyway. So I would be looking for money on immigration and maybe some policy, but maybe that policy is not legislative policy, but executive action policy.
There's something else I'd like to ask you about, given your experience with Minority Leader Mitch McConnell, Rohit, which is that there's been reporting this week that there are back-channel efforts underway to secure McConnell's endorsement of former President Trump. Of course, we've seen pretty much all of the Senate leadership at this point do so, but Trump is someone that McConnell has called practically and morally responsible for what happened at the Capitol on January 6th. He hasn't exactly been shy about his disdain for some of the former president's policies, actions, even words he's spoken against McConnell's wife. Does it surprise you that McConnell would consider endorsing Trump at this point?
Yeah, so look, I mean, the one thing I will say is that Leader McConnell has been consistent that he would endorse and support the Republican nominee for president. And so despite whatever else he has said about former President Trump, he's also said he would endorse the Republican nominee. And to the extent that former President Trump ends up being the Republican nominee, that would pave a path for that potentially to happen. I think it's too soon to say for sure which way this is going to go or how this is all going to shake out. But he has been clear that he would support the Republican nominee for president.
There's a lot there, considering the impact that Donald Trump could have on this very issue of Ukraine. Where are you on Ukraine funding, Rohit? We've kind of danced around this a little bit. Is that something that will be addressed once the shutdown is either avoided or cleared somehow?
Yeah, I mean, look, Speaker Johnson alluded to this. He said we're looking at all options. They're clearly looking for a third way, right? Way one would be the Senate bill. Way two would be to do nothing. And way three would be to find some other version of compromise legislation. Again, it's clear immigration is top of mind. And while there was an effort that ultimately failed in the Senate to, resolve that issue, maybe the House can find, a different approach that is more to the liking of House Republicans that can pass. But I don't think this issue is going away. Remember, it's not just Ukraine funding; it's also Israel funding. Right. It's also there's some Taiwan money in there as well. So there's more to it than Ukraine, even though Ukraine has been kind of dominating the political headlines.
All right, Rohit Kumar, now of PwC, but of course, someone who has in the past worked very closely with Senator Mitch McConnell. Thank you so much for your time. There's a lot to digest here, from Ukraine to the border to avoiding a government shutdown, and we're going to have more on that with our political panel coming up, Joe.
You said it. Stay with us. Rick and Jeannie are on the way in. This is Bloomberg.
From Bloomberg World headquarters, I'm Charlie Pellet. 121 right now on Wall Street. We've got stocks lower across the board. S&P is off session lows, but right now still looking at a loss of 6 points with the S&P at 5,062, down now by about 0.1%. Dow Industrials down 161 points, down 0.4%. The Nasdaq Composite Index lower, little change, down 3 points right now, a drop there of less than 0.1%. 10-year at 4.27% with a 2-year right now 4.68%. Traders are refraining from making big bets ahead of Thursday's inflation data. Also, we've got a parade of central bank speakers. Spot gold higher by 0.2%, $20.35 the ounce. Bitcoin, the big story, up 4.4%, back above 57 right now, 57,050 on Bitcoin. Crude up 1.5%, 78.71 a barrel. Viking Therapeutic shares are surging more than 100%. Right now, we do have Viking up by 114% after the company said its experimental obesity drug delivered positive results in a mid-stage trial. Among other drug makers with obesity products, we've got shares of Lilly down 0.75%. Novo Nordisk is lower by 1.3%. Again, recapping stocks lower across the board. S&P 500 index down now by 7, a drop of 0.1%. Balance of power continues. Back we go, and once again, here are your hosts, Kaylee Lyons and Joe Matthew.
Charlie, we do thank you, and we'll be back to Charlie Pellet for another update on trading a bit later on this hour. With the meeting at the White House just concluding, and a bit of drama kind of in the driveway after Mitch McConnell left. He went back to the Capitol while Mike Johnson stayed at the White House. Apparently he'd had a quick one-on-one with the president. Not a lot to say, though, Kaylee Lyons. When he emerged, he talked about the border. He spoke optimistically about avoiding a shutdown, but we still don't have a plan.
No, not that was outlined at the sticks, at least, although Senate Majority Leader Chuck Schumer, speaking to reporters at the Capitol, said that the leadership told Johnson continuing resolutions are what's going to be needed to avoid a shutdown. Right. Perhaps that makes sense logically, considering we have 3 days to get this thing wrapped up to avoid a lapse in funding for these parts of government. But we have to keep in mind here that Johnson has said repeatedly he doesn't want any more stopgap measures. And Tom Emmer just told us that would never pass this House Republican conference just a few weeks ago.
He sure did. And frankly, not much has changed since then. The sticks, by the way, Kaylee refers to, those are the mic stands.
Yes.
Let's bring you inside the West Wing. You're such a Washingtonian. To the Oval Office. Just a sense of what it was like to be in the room. You've got the 4 congressional leaders and the president and vice president at the fireplace. Let's take a look.
And Ukraine, I think the need is urgent. I hope we get to speak to that a little bit. And I think the consequences of inaction every day in Ukraine are dire. I've been speaking to some of our G7 partners and
referring to the dire needs in Ukraine. If you're with us on the radio, showing images of a packed Oval Office with the press pool in there. They were quickly escorted out to allow that meeting to happen. Kaylee, it lasted about 90 minutes from our count.
Yeah, it was pretty quick, all things considered, relatively on time, which isn't always the case.
Yeah.
No, they weren't going to waste any more time together in each other's presences than perhaps absolutely necessary. But we are always glad to have Rick Davis and Jeannie Shanzano in our presence, at least virtually, Bloomberg's politics contributors who are joining us now. Rick, Jeannie, we were just speaking with Rohit Kumar, who used to work in McConnell's office, helped negotiate the debt ceiling deal back in 2011. He told us, look, nothing really happens in these Oval Office meetings. Everybody goes back to huddle in rooms at the Capitol, and that's really where things get hammered out. Jeannie, what was the point of today, if nothing concrete emerged from it?
Yeah, I mean, I myself didn't expect much productive out of it. I think the president had an interest in inviting everyone to the White House to show that he is on top of this. And of course, when you get an invitation to the White House, you can't refuse it. So off they all went. And, you know, from that perspective, I do think this is a self-inflicted wound on the part of the Republicans. You know, Joe Biden wants to run against this do-nothing Congress, and he wants to continue to say right through the State of the Union coming up next week that they just can't get things done. You can't turn the whole government over to these folks because they can't get anything done. And this just plays into his hands, including the fact that Mitch McConnell didn't go out with his own party member that he decided to head right back to Capitol Hill. Who can blame him? This is a self-enforced, self-inflicted error on the part of the Republicans. You need to pass the budget. There's no big policy disagreements. This is all politics, and that is not going to play with the American public. So I think it was a small win for the president and a big loss for the Republicans in the House.
Rick, you spoke earlier about the triangulating against Mike Johnson inside that meeting. Everyone but Mike Johnson seems to be rowing in the same direction. Did Mitch McConnell's decision to head back to the Capitol leave him alone in the driveway speak to that?
Sure. Mitch McConnell didn't want to put him in the position of having to actually disagree with Mitch McConnell, because if Mitch McConnell stood there, he'd sound more like the majority leader of the Senate, Chuck Schumer, because they actually don't disagree on how to fund government, how to fund Ukraine, and what to do about the border. So he did him a favor by saying, you know what, rather than cause problems for you as the seasoned Republican here, I'm just going to let you walk out there on your own and I'll head back to the office. So, but yes, this was all about pointing the finger at the one person who's standing in the way of a border deal, of a supplemental deal, of a budget deal. Everybody else has agreement on those things except for Mike Johnson and the Republican caucus in the Senate or in the House. So I think Biden accomplished that. The fact that they had the speaker walk out on his own and basically reiterate those talking points in contrast to everybody else who was at that meeting, isolates him, shows him how alone he is, and puts all the onus on progress on him.
Of course, as we have the conversation related to the supplemental funding package, it was not just Ukraine that we heard the president raise, but Israel funding as well, because that is a component here. And we know that that potentially could mean that any package in the House could lose support, not just on the Republican side, but on the Democratic side as well. And this is something we're probably likely to see in the Michigan primary, which takes place today. There's a big effort underway, supported by Arab Muslim Americans, to vote uncommitted rather than for President Biden because of his stance on being supportive of Israel despite perhaps what is happening in Palestine and the high civilian death toll. But this is actually something he spoke about with Seth Meyers in New York yesterday, talking up the prospect of a ceasefire in the not-so-distant future. Take a listen to the president.
Could you give us a sense of when you think that ceasefire will start, sir?
Well, I hope by the beginning of the weekend. I mean, the end of the weekend. At least my national security advisor tells me that we're close. We're close. It's not done yet. And my hope is by next Monday, we'll have a ceasefire.
So next Monday, a ceasefire, Jeannie, when there is a primary in Michigan today. Think this timing's a coincidence?
No coincidence at all. The Monday's no coincidence. He's staring straight down the State of the Union. I think the one unfortunate aspect of that, you know, he's right to say he's hoping we get there. The one unfortunate aspect is the way that video rolls out with the ice cream and the sunglasses. I don't think that's the look you should be portraying when you're talking about something that your constituents, many of them, feel is an absolute travesty of what is going on in Gaza, according to many of those people who are going to be voting today. I don't think you want to address that in terms of the number of deaths and everything else with sunglasses and ice cream. So that I don't understand, but he is, you know, hoping, of course, that we get at least a temporary ceasefire, and that is what the president is banking on. And if it comes with the State of the Union week, all the better for the administration and the campaign.
So, Rick, is the State of the Union the real deadline for everything here? We're going to have a ceasefire by then. Maybe we'll have a government funding deal, some action on Ukraine. Maybe we even see an executive action on the border that we've reported the president is considering. A lot could happen between now and next Thursday.
Yeah, no question about it. Some of those things we're waiting on right now. If there's going to be executive border action, you'd think they'd do it before or during the President Biden's trip to the border on Thursday. Want to remind everybody, we thought we had a ceasefire deal over a week ago that fell apart. So I think they're trying to get one as soon as they can. Whether that had anything to do with Michigan's primary today, probably not. It's just not that important to the president. But for sure, he wants to get these things settled and done before he has to give the State of the Union. And that is a real deadline.
Well, and it's just coming up 9 days from now. A lot, obviously, still to happen in the interim, and perhaps a temporary ceasefire beginning would be one of those things. But Rick, as we think about that issue, specifically how it's showing up in Michigan, and the idea that a significant portion, perhaps, of a certain demographic is not happy with the way the president is handling this issue, you could also add to the list of young people who are turning away from the president, polling suggests, and the idea that manufacturing, which is a big issue in Michigan, Biden has specifically went to automotive labor and supporting the unions there. They don't necessarily seem to be more for him than for Trump as a result. Just how many different demographic issues could be showing up for Biden in Michigan, not just in this primary, but as we look ahead to the general election to come?
Yeah, no, I mean, Michigan is a real tightrope for Joe Biden. As you mentioned, you've got over 100,000 Arab Americans who live in Dearborn. That's in Wayne County. He won Wayne County by 68% in 2020. But the reality is that's probably too little. He only won the entire election against Donald Trump by 150,000. So you can imagine if those Arab Americans sit home, he's got a problem. And the reality is that no state gives you more of a clear picture of the demographics of this election coming up than Michigan, where almost 100% of the vote for Joe Biden's coming out of the cities and 100% of the vote for Donald Trump comes out of the counties. Donald Trump will win virtually all the counties. There'll only be a dozen counties that Joe Biden win, but it'll be 80% of the vote total. So, it's one of these situations that mirrors the country right now, and it's worth watching. And frankly, I can't wait for the next Bloomberg poll to come out so that we can see another trend as far as what's happening in Michigan for the general election.
It's but days away. Rick Davis and Jeannie Shanzano, great talk. Thanks for being with us on Breaking News today. We can always count on our Bloomberg Politics contributors here on Balance of Power. I'm Joe Matthew in Washington alongside Kaylee Lyons. Thanks for being with us on Bloomberg TV and radio as we bring you up to date now on world and national news with Nancy Lyons in the Bloomberg 99.1 newsroom in Washington. Hi, Nancy.
Thanks, Joe. Senators Tammy Duckworth and Patty Murray, both Democrats, are demanding a vote on their bill to federally protect in vitro fertilization and other fertility treatments. It comes after the Alabama Supreme Court ruling that frozen embryos should be protected as people. Duckworth says the bill establishes a statutory right for people to access assisted reproductive technology.
I know I'm not alone when I struggle to understand how politicians who support this kind of policy can possibly call themselves pro-life.
Senator Duckworth, who lost her legs and partial use of her right arm in a combat incident, used IVF to conceive her children. Duckworth's bill, first introduced in 2022, would establish federal protections that would override any state policy regarding IVF access. European leaders are rejecting the prospect of sending combat troops to Ukraine. This comes on the heels of France promising to do whatever it takes, including sending troops to the region, to keep Russia from winning the war. NATO Secretary General Jens Stoltenberg spoke with Associated Press about NATO's view.
There are no plans for NATO combat troops on the ground in Ukraine.
Again, NATO Secretary General Jens Stoltenberg. The Interfax news agency quotes Russian officials who say Western countries should evaluate sending troops, and if such a move corresponds with their interests. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.
From Bloomberg World Headquarters, I'm Charlie Pellet. We got red on the screen with the Dow, the S&P, NASDAQ 100 index all lower. Russell 2000 in the green, advancing by 1.2%, but the rest of the market is trading lower. S&P right now down 5, drop there of 0.1%. Dow Industrials down 155 now, drop there of 0.4%. NASDAQ just turning higher again, barely, has been swinging between gains and losses. Right now up by 1 point on the NASDAQ Composite Index. 10-year 4.28% with a 2-year 4.69%. Spot gold right now little changed, up 0.1%. An ounce of the precious metal now at 2,033. Bitcoin surging higher. Bitcoin up 4.5%, 57,108 right now on Bitcoin. West Texas Intermediate crude up 1.5%. WTI at 78.77 a barrel. Macy's after earnings up 3.5%. Among other rival department store chains, Kohl's up 3.7%. Discounter Walmart, little change today, and Amazon also little change, down by 0.9%. Briefly after earnings, we heard from Lowe's this morning, up 1.6%. Rival Home Depot, it is up by 0.5%. Again, recapping, stocks lower, S&P down right now, the S&P lower by 5 points, a drop of 0.1%. Balance of power continues in Washington now. Once again, here are your hosts, Joe Matthew and Kaylee Lyons.
Charlie Pellet, thank you so much, as always, for always keeping us up to date on what's happening in financial markets on both Bloomberg Television and Bloomberg Radio. And, of course, Joe, a big story in financial world yesterday was that the FTC sued to block what could be a pretty big merger. In fact, it would be the largest merger of grocery chains in the United States. Kroger and Albertsons would be an almost $25 billion deal, and the FTC says it would lead to higher prices and lower quality for consumers, potentially could be harmful to workers. They don't think the remedies the companies have offered have been enough. And we actually got to speak with someone from the FTC, Douglas Farrer, about that yesterday on the evening edition of Balance of Power. This is what he told us about whether it actually creates anti-competitive competition if these two aren't allowed to merge and try to compete with the likes of Walmart or Amazon. Take a listen.
I would say no. Kroger and Albertsons view each other as their number one competitor. And the effect of that competition is to lower prices for consumers on important goods like bread, eggs, milk. And it also allows workers to compete better for benefits, wages, working conditions. So really, no, the answer is competition is good. And if we don't stop to block this merger, then there'll be less competition and big price effects for folks who need to buy groceries.
So that was Douglas Farrer of the FTC. Of course, the companies have come out and said that they will be litigating this. They're getting ready to make their arguments in court.
Yeah, this will be quite the fight here. And it's interesting because they're both saying the same things about each other. If you look at the statement from Kroger, they say the FTC ruling makes it more likely consumers will see higher food prices.
Yes.
And their argument is that you're not letting us better compete with the likes of Walmart and Amazon. And there's a question about who is right on this, and that's why we wanted to talk to Jennifer Rhee at Bloomberg Intelligence, the voice we turn to when we're talking mergers and acquisitions. This is her specialty, an antitrust analyst. Jen, it's great to see you joining us live from New York. Who's got the winning argument on this? They're both pointing their fingers, saying the same thing about one another.
Well, first, thanks for having me. Absolutely, they are. And, you know, this has been an argument lately in the last 2 years of merging companies. We really need to come together to better fight the big incumbents or the big legacy companies. JetBlue and Spirit tried that too. And you know what? It's just an argument that never really wins, because the way the FTC will view this is the way to beat competition, the way to enhance competition is not to further consolidate. And in this particular case, what the FTC's looked at is how these companies, what constraints their pricing? What do they view as the competitive force that might make them lower a price or increase their quality? And what the FTC says they saw in those documents is that it's not a company like Costco. It's not a company like Amazon. It's really more a traditional grocery store. So the FTC's defined a market that includes what they call traditional grocery stores and doesn't include stores that may sell some groceries but aren't like a traditional grocery store. And so this is where that big argument is taking place. What is the sphere of competition and who do they really compete with?
Well, as we think about the FTC's track record under Lina Khan, it hasn't been a story of success after success. In fact, they've been dealt a significant amount of blows in court, specifically as it relates to attempts to stop some tech-related deals. Do you think the FTC is likely to get a win on this one in particular?
I think they're more likely to get a win on this one than they have in the past. I mean, the Microsoft Activision challenge was very difficult because that was a deal that vertically integrated two companies, and they are just by definition harder to challenge. This deal is easier for them to go into court and challenge because at the outset, it was anti-competitive. I mean, there's no doubt about it. You look across the country at where these two companies have stores and you draw that circle and you look at who else they compete with within that circle, and no doubt there are thousands of them, and no doubt in some of them you have a merger to monopoly or a merger to duopoly, and that is anti-competitive. So it was always going to be about the remedy, and the remedy has to be a good one because we've seen failures in grocery mergers with divested assets. So we have this track record where we've seen that remedies in grocery deals haven't worked very well. So this remedy had to be a really strong one, and I don't actually think it is all that strong.
Involving one of these very companies, actually, was Albertsons' merger or acquisition of Safeway that didn't go the way the FTC wanted, right? They were supposed to strip off all these stores, and the buyer went bankrupt before they could do it. Jennifer, I want to ask you about a lawsuit in this case filed earlier this month by Colorado's Attorney General, and it addresses the pre-existing relationship between Kroger and Albertsons over a strike. This was a worker strike 2 years ago at Kroger's King Soopers business. And this lawsuit alleges a nefarious bargain, the language they use, struck between the two stores so Albertsons would not poach Kroger's striking workers. To what extent did that factor into this decision?
You know, really, that's a very Colorado-specific issue. This is something that happened in Colorado and damaged Colorado workers, conceivably. And I think maybe the reason why Colorado filed their own lawsuit in state court there rather than joining the FTC, which is usually the more typical route that state attorney generals will take when a merger is being challenged, because they're looking for more than just to block the deal. They're also looking for some sort of a fine or a remedy, a monetary remedy for what happened there. So I think that's why they filed that suit. Did it factor into the FTC's lawsuit? I don't think it would have mattered. This lawsuit was going to happen whether that Colorado evidence came to light or not. But it is additional evidence that these companies closely compete with each other.
It also strikes me, Jennifer, that as we talk about the argument the companies are making, the idea that this merger is actually what's needed to keep them competitive against big behemoths like Amazon. In the FTC's mind, knowing that the FTC is actively looking at Amazon, potentially maybe interested in breaking up Amazon as a remedy for what the FTC views as anti-competitive behavior on its part, do those two things factor together? The FTC is not buying the argument you have to compete with Amazon because Amazon may look different if we have our way down the line?
You know, I think the thing is you have some real competing interests there by the FTC, and one of them is going to outweigh the other. There's no doubt the FTC has issues with Amazon right now and hasn't actually been very happy with Amazon's own activity, merger and acquisition activity over the last couple years, and they have an existing lawsuit right now pending against Amazon. But they don't want to see competition enhanced by further consolidation, right? So they're simply not going to accept the argument that two really big companies have to come together and consolidate in order to compete against an Amazon. What they'd rather try to do is bolster competition across that entire market.
Just got about a minute left here, Jennifer. Broadly speaking, this is a politics show. What is the Biden administration's disposition when it comes to mergers and acquisitions? We've seen, to Kaylee's point, Lena Khan swing and miss a couple of times now. Is their view evolving?
You know, I don't think there's a view evolving that's against what Lena Khan has been doing. The Biden basically instructed agencies to really amp up antitrust enforcement back in 2021. And the FTC is following that executive order, right? July of 2021. This takes time. You know, bringing new and novel concepts, trying to slow down consolidation in new and different ways that have been utilized in the past 20 years is difficult and will take time. And there will be swings and misses. And I think that the viewpoint is probably let her have time, let the FTC continue to bring these suits and continue to develop the law, and things will come around. And to be honest, their track record has been changing a little bit.
All right, Jennifer Rhee of Bloomberg Intelligence, senior litigation analyst, expert on all things antitrust. Always good to talk to you. And of course, we're going to have more antitrust-related conversation later today, Joe, with Democratic Senator Elizabeth Warren.
Looking forward to that.
Of Massachusetts.
She'll have some feelings about this.
Yes, certainly.
Specific marriage, I think. Yeah.
Yes, and others as well. That's coming up later, but we have more for you on this show next. This is Bloomberg.
This is Balance of Power with Joe Matthew and Kaylee Lines on Bloomberg Radio.
They have emerged from the meeting, although we never saw Mike Johnson leave the building. I guess he could be hanging out having ice cream right now with Joe Biden. I tend to doubt that. I'm Joe Matthew alongside Kaylee Lines in Washington. Thanks for being with us on Balance of Power on Bloomberg TV and radio. The meeting began just before we took air on the radio at noon, Kaylee. It wrapped up about 90 minutes later. Two issues at hand. Government shutdown, that's 4 days away, unless they come up with a plan. And funding for Ukraine, Israel, Taiwan. It's very difficult to tell based on what we heard from Democrats and Republicans leaving that meeting, not including Mitch McConnell, who fled to the Capitol, if anything got done.
They said it was productive. They said it was intense. They all seemed to be trying to express optimism that a shutdown was going to be avoided, didn't necessarily give us much clarity as to how. And something else that Mike Johnson specifically brought up first thing was the border. He said he had a frank conversation about President Biden on that in the one-on-one meeting they had after the other three congressional leaders left the room and are all now presumably leaving the White House.
Interesting optics here.
Interesting optics indeed. Still at the White House, though, is Bloomberg's White House correspondent, Akayla Gardner, who is joining us now. So, Akayla, obviously there were a number of different subject areas of discussion here. Did President Biden specifically accomplish what he wanted to with this meeting?
I think it's too early to say whether he got what he wanted accomplished. At the end of the day, what this meeting really highlighted is there is just multiple issues that are piling up in Washington that are key to President Biden's agenda. You mentioned government funding. All four congressional leaders expressed confidence that they'll be able to avert a government shutdown. That is now just 3 days away. That March 1st deadline that will shut down at least partially the government, including commerce, the Education Department, Justice Department. So a huge segment that would affect hundreds of workers here. But all of them expressed resolve that they will be able to reach an agreement. What is much less clear is whether they'll be able to reach agreement on Ukraine, on funding for Israel, on Indo-Pacific. Those are all things that are still left up to these lawmakers to decide.
I'm loving this behind-the-scenes view of Akayla Gardner at the White House for our viewers on Bloomberg TV and YouTube. Akayla is standing right where the principals were a couple of moments ago. This is where the stakeout happens, right in front of that West Wing portico. Akayla, you are the newsmaker now. I'm curious if you know, did Mike Johnson actually leave the building?
He did leave the building. We don't know if he had ice cream with President Biden, but he did get that one-on-one meeting that he's been asking for and that the White House has dismissed for really a long time. And really, this meeting comes at a time where there's been clear tension between these two leaders, between Speaker Johnson and President Biden, because the White House has just, frankly, not seen him as a sincere negotiator. They feel like they have met his demands to tie border funding to Ukraine and Israel. And yet he got what he wanted today, and we'll see if that is actually going to lead to results and whether this thing can get passed.
Well, and of course, Mike Johnson talking about the border as he emerged, talking about how America's needs need to be put first, maybe over the needs of allies like Israel and Ukraine. But President Biden himself is making a trip to the border later this week on Thursday. What's his objective going to be if no executive actions come in tandem with that meeting, or that visit, rather?
You know, that was a really interesting part of this discussion, because we heard from Senator Schumer that he believes that the President Biden does not have the legal authorities to do some executive action, whether that's an emergency or declaration, what have you. He does not believe that the president has those authorities. And that is also what we've heard from the White House as well. And yet you still have Speaker Johnson saying he wants Biden to take executive action now. That is a clear tension here. But Biden heads to the border on Thursday at the same day as Donald Trump, and really highlighting how much of a political liability this has become. Bloomberg News and Morning Consult polling continues to show immigration is rising as a top priority, specifically among Republicans. But Speaker Johnson said he's heard from voters across the political party that this is an issue that they're seeing in their cities.
Akayla, are you on pool duty today? Were you in the Oval Office for that brief period of time?
I am. It is actually raining outside.
Oh, my God. Well, so you're getting wet for us as well. So you were in there. Chuck Schumer said it was intense. What did he mean?
it's hard to say. I mean, we were not a part of those discussions. It was a closed door meeting, but that is a huge statement to hear from the senator, because of course he's been in Washington for many years, and he said it's one of the most intense discussions that he has been a part of. But again, that just shows how many issues are just piling up, and the frustration has to be huge for him as the majority leader, because the Senate has now passed 2 different legislations, one tying all of these broad priorities to the border and one without it. He is just frankly just caught in a stalemate here, and he's not able to get some of these bills that have just been taken painstaking months of negotiations through the House. Johnson has just refused to put those to a vote, and so we'll see what happens next after this meeting.
This is incredible. Zooming with Kayla live from the White House. Can we make this a regular? She's a star. We have to do this on the regular. Kayla, thank you so much for stopping down. She's on pool duty, but still with us here on Balance of Power. White House correspondent for Bloomberg, Kayla Gardner. Many thanks for bringing us inside the perimeter. They're in the driveway. They don't let us walk around there with cameras. That's a special moment with Kayla.
Yeah, absolutely. Speaking of special moments, I bet they got a few of those coming up on Bloomberg Business Week this afternoon. Carol Massar, Tim Stenovic, what you got coming up on the program?
Well, right now I'm just looking at some headlines. Apple winding down its electric car plans, ending its decade-long foray into that area. They're saying some Apple Car employees to be cut. Many are going to shift to AI, their artificial intelligence efforts. Maybe not a surprise. But nonetheless, a real shift, and just a reminder of the power of AI in this environment.
Shares down about 0.5% as we speak. But this is an exclusive from Mark Gurman.
All right, guys. Yeah, so that's top of mind.
He just continues to crank the headlines. Amazing stuff. Look forward to listening. Miss you guys. Carol and Tim. Kaylee, I'll meet you at 5 for Balance of Power. Bloomberg Business Week starts right now.
This is Bloomberg Business Week. Insight from the reporters and editors who bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovic on Bloomberg Radio.
And a very good afternoon, everybody. Live on Bloomberg Radio, TV, YouTube, and Bloomberg Originals. This is Bloomberg Business Week. I'm Carol Massar along with Tim Stenovic. Of course, we're going to keep a watch on those headlines about Apple winding down its electric car plans. They've been doing this. It's been a decade-long pursuit for them. But again, in this environment, Tim, no surprise, the shift to AI is what's going to be on their radar.
Yeah, for more on that story, check out Mark Gurman on the Bloomberg Terminal. That one right now on the terminal. Hey, Carol, here's the setup this hour on this Tuesday, February 27th. Big week for bond sales ahead of a big week for economic stats, including a reading today showing U.S. consumer confidence falling for the first time in 4 months.
And so over the next 60 minutes, we're going to be all in on consumers, including what's going on over at Macy's. We have seen the stock move to the upside. This as the company plans to close almost a third of its U.S. locations. It's also continuing to try and fight off those activists. So we're going to get to what the CEO told our own Romain Bostic. He's coming up in just a minute.
All right, and speaking of the consumer, we're going to talk about Kroger's bagger turned CEO who's facing his biggest challenge in 46 years. A great profile of this leader.
And staying with what the consumer is up to, Whirlpool CEO, I should say, on the strategy on what consumers actually want to buy and how they are going to embrace that. It's also kind of good because it comes with, Tim, some higher margins.
Oh, higher margins. Companies always like those. Yeah. Hey, we're going to wrap up with NVIDIA and its $70 million Florida supercomputer hitting a bit of a snag. All that and more over the next hour. First up, though, a check on the day's trade and top business stories. Here's Charlie Pellet.
Hi, thank you very much, Tim and Carol. Certainly the Apple headline bears repeating a story we're working on, but right now the headline, the story based on reporting from our Mark Gurman, Apple is canceling a decade-long effort to build an electric car. This, according to sources, abandoning one of the most ambitious projects in the history of Apple. Right now we've got Apple shares trading lower, Apple down by 0.4%. But again, Apple canceling work on an electric car, shifting the team to generative AI, a story we've got you covered on here on Bloomberg Television and Radio. The Dow, the S&P, NASDAQ, all trading mixed right now. I want to begin with the Russell 2000. It is surging, small cap shares higher. We've got the Russell 2000 up now by 1.2%. S&P lower, down 1 point, little change there. Dow Industrials down 139, down 0.4%. The NASDAQ Composite Index up 21, higher by 0.1%. Again, the Russell bears shares repeating, surging today by 1.2%. Bitcoin also a major story today with a 57,000 handle, 57,173 right now on Bitcoin, up 4.6%. 10-year yield 4.29%, the 2-year 4.70%. Spot gold a little changed, up 75 cents the ounce to $2,032 right now on gold. Crude oil, West Texas Intermediate, up 1.6%, $78.83 a barrel. Sources say Warner Brothers Discovery has halted merger talks with Paramount, that according to CNBC. We got shares of both companies higher. Warner Brothers up 1.5%. Paramount Global up now by 0.2%. Again, repeating our top story, Apple canceling a decade-long effort to build an electric car. This according to our Mark Gurman. I'm Charlie Pellett, and that is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. All right, keeping a watch on Apple, also watching shares of Macy's today, rallying up almost 8% at its highs today, now with about a 2.9% gain. This as the company plans to close almost a third of its namesake U.S. locations. The company, the department store chain, you know it well-known brand, looking to fight off a pair of activists that are seeking to buy the company. This, by the way, among our most read stories on the Bloomberg today, Tim.
Macy's also warning that it expects first quarter earnings of 10 cents to 16 cents a share. That's far below the consensus estimates of 45 cents compiled by Bloomberg. We got with us Bloomberg's Romain Bostic. He caught up with Tony Spring, the new CEO of Macy's, who is not new to the company, but took the top spot earlier this month. Romain is the co-host of The Close on Bloomberg TV. He's here in our studios with us in New York. Romain, good to have you here with us. So top of mind, of course, is the store closures. What do we know about which stores are closing, where they are? Do we know anything?
Well, they won't specify specifically where these stores are being closed, but Tony Spring told me two interesting things. He said, first of all, about 25% of their footprint, that's Macy's, Bloomingdale's, Bluemercury, add it all up, only accounts for 10% of their sales. Basically, he's saying a huge portion of their portfolio is underperforming. He did not specify where, but he said as many as 150 stores will be closed over the next 3 years. Remember, this is a company that had about 700 plus stores prior to the pandemic. As of today, that's somewhere around the 500 mark. He says by the end of 3 years, that'll be down to 350.
What's interesting to me, Romain, they've been closing stores for some time.
Yes.
This is just another layer of store closings. I mean, what does this do? How does this shift the business or change the business dynamics?
It's a big part of it's a big question, and it's a big part of the reason why I think you've seen the shares oscillate so much. At one point in the red, at one point up 8%, now only up 3%. No one knows. I did reach out to Arc House, which is one of the firms that we know, at least publicly, has made an overture, a $21 bid that was immediately rejected by the company. And I asked Tony Spring about that. He would not comment on it. I called Arc House and asked them about it. They said they still need to digest this report, but they're not really seeing anything that they like so far.
Okay, in the report, it's not just about store closures. The company also saying it's going to open up some new stores.
Yeah.
Different types of stores, though.
Yeah, this is key. Now you mentioned how Tony Spring has been there for a long time.
Yeah.
He's been at Bloomingdale's pretty much his entire career. He started there back in the late 80s. He eventually, about 10 years ago, rose to be CEO of Bloomingdale's, and he's really credited for turning Bloomingdale's around. Remember, it got kind of stodgy for a while, and he really created this sort of boutique kind of feel to Bloomingdale's stores where the individual brands would have their own sections, sometimes staff with their own people, and it really revitalized not just sales, but just the whole cachet and image of it. And the hope here is that he can do the same thing for Macy's overall. But he said a big part of that push is going to be leaning deeper into Bloomingdale's, deeper into Bluemercury, the beauty products brand, and less into Macy's itself.
Yeah, kind of interesting. I am curious, too, what are the conversations that the Macy's CEO is actually having with the activist investors? Is it a back and forth at this point, or what do we know?
It's hard to say. He would not comment on that at all. I could just tell you from my discussions that I've had with Arc House, as well as with another major firm, PE firm, that has also said they've been interested. They basically made it clear that they think the valuation of this company is somewhere around where it's trading today, which is right around $28 to $21 a share. Right. I'm going to speak a little bit later on Bloomberg Television with David Schwartz over at Morningstar. He sees a valuation more closer to 25, but he says the real valuation for this company is going to be more real estate sales and probably, in his view, a take private.
Okay, so that was going to be my next question, Romain. I mean, the analysts that you're talking to, and including, maybe the folks inside Macy's and the folks at the private equity firms, does this look like it's going to be a target continuing into the future, or is this a company that, is going to try to take a go on its own?
My general sense in talking to Tony was that he has every sort of right now his focus is really keeping this business as a standalone business, as a public company, and really trying to fend off the horde that's coming around here. He saw he has a lot of value in not just what Bloomingdale's does, but with Blue Mercury. They're going to add 30 stores to Blue Mercury. I mean, that's they're basically going to increase something like 30-40%. Bloomingdale stores are also going to go up by about 50. The number of Macy's stores, why I didn't specify, that's obviously going to go down. That's the only way you get to 150 closures if that goes down. So he does see value, and what he says is women shoppers, more visualization of merchandise, and what he called retail as theater, which gets to this idea of the sort of experience of walking into these stores that is not just about buying a good, but it's, can I go there for dinner or go there for an event or something else, something that brings people into the stores, and then maybe hopefully they buy a tie.
Bloomingdale's is known for that.
Yeah, and they've done that very well. When was the last time you saw that in Macy's?
Yeah, I can't even remember actually the last time I was in Macy's, to be quite fair. I mean, having said that, Bloomingdale's is right here, so it's an easy place, but it's a different type of market, right? Macy's is, I feel like, kind of more middle market. I think Bloomingdale's is higher end, and it speaks to something about either margins or the customer who can afford to keep on shopping versus those who are getting a lot choosier, if you will.
And he did say with the Macy's brand specifically, they're going to do a much bigger push into private label merchandise as a way of sort of capturing that middle income and lower income consumer.
What's the takeaway for you on this? I mean, I'm curious about how much, it feels like there's an awful lot of pressure on Macy's to really kind of change the dynamics of the numbers, hence those store closings. So,
here's the takeaway.
Yeah.
A veteran of this company who just took over literally 3 weeks ago is trying to execute a plan, yet they've got a big annual meeting. They've yet to set the date where we already know at least one activist investor is going to nominate 9 folks to this board. So he's got a big proxy fight on his hand. So he's going to have to show some results, or at least show a path to those results really quickly here, because they're not going to give him much time. He's got months.
Yeah, I think about the next earnings quarter, right? There's got to be something very significant and different. Great to get some insight from you. Thank you. Always appreciate it. Romaine Bostick, co-host of The Close, coming your way at the top of the hour on Bloomberg Television. So we'll continue to, of course, just like Romaine, watch Macy's shares. Romaine, thank you so much. All right, Macy's shares, they are up just about 3%, but again, off the high that we saw earlier when they were up nearly 8%. We're going to stay tuned with the consumer space to another name that's also moving to the upside today.
Yeah, Kroger shares higher right now by 2.5%. This is the company's CEO, Rodney McMullen, is facing his greatest test yet as the head of the largest grocer in the U.S.
And this is coming one day after the Federal Trade Commission, along with 8 states and Washington, D.C., sued to block Kroger's acquisition of Albertsons, arguing that the tie-up would lead to higher grocery prices and lower wages. The parties, they're all planning to litigate in court. So let's get some insight on the CEO who has been at Kroger for more than 4 decades and what's at stake for the company, combined or not combined. With us right now is Bloomberg News retail reporter Jawan King in our Chicago bureau. Jawan, good to have you here with us. So tell us about this individual who I have met, was on a panel that I moderated at Milk, and he's very much understands this business, has been in it for a long time, started at the bottom.
Yeah, so Rodney McMullen, he is the current CEO of Kroger. He's been in that role for about a decade, and he has a really interesting history. He started working at the company as a part-time bagger in the 70s, and he moved over to the corporate side to be on their accounting team, and has really moved up through the ranks. He served as the CFO, COO, vice chairman, and now he's been the CEO, and he's really led the company through pretty important milestones, various acquisitions, the emergence of online shopping, and of course pandemic.
How would you rate, Jawan, the milestone that he faces now? His biggest challenge in 46 years is how you describe it. What's he up against?
Well, it's the biggest M&A deal for the company if it goes through, and it would be the biggest in the U.S. grocery sector, again, if it goes through. So, from a dollar and, valuation standpoint, it is big and grand, it comes at a time as the grocery sector really changes, and, is continues to be quite competitive, and consumers are also changing how they're shopping, what they're shopping. So it's coming at a really critical time for the company and for Rodney McMullen.
Well, and I do wonder their case about, or they're planning to fight this case, and they argue the growing dominance of Amazon, Walmart, and Costco. Are already strong players out there, and it gives consumers a lot of options. I mean, are they right? I mean, how do you look at this space overall in terms of what a combined Kroger-Albertsons entity would mean potentially for consumers? Or it seems like there's a fair amount of competition, but what are you hearing? What are you seeing?
Yeah, I mean, I think it, kind of hinges on this question of how do you define a grocery store? And the companies argue that even if they combine, they would still be behind, the companies that you just mentioned. So Walmart, Amazon, and Costco. And, the size, they argue, really matters, and the deal would help them sort of gain more leverage against suppliers, would also, help with their technology and give them greater scale. So that's their argument here.
Okay, we mentioned the news that the FTC is sued to block Kroger's acquisition of Albertsons, along with 8 states and Washington, D.C., arguing that the tie-up would lead to higher grocery prices and lower wages. So what's the next move here for Kroger and Albertsons if they do want to pursue a tie-up, and what are the chances that something actually does succeed?
Because they've been pursuing this for some time,
2022,
right?
since 2022. I mean, this
Exactly.
is something we've been talking about for more than a year at this point.
Yeah, it's been going on for quite some time, and each, I think, both of the companies, the various parties that have come out in opposition from the beginning, they've been trying to defend their sides here. And next, they go to court, and they'll be litigating, and we'll have to wait and see how that pans out. And I think it also comes at a really interesting time when consumers are facing food inflation, have been facing higher food prices for quite some time now. So I think various parties who are curious and invested.
Jaywan, I do wonder, and this wouldn't be, they recently did, Kroger that is, another acquisition when they bought Fred Meyer, and that gave them a bunch of different Harris Teeter, Roundy's, Home Chef, and more. But I do wonder in the grocery space where the margins are so slim that by getting bigger, does it give the company the opportunity to buy in mass large contracts and able to then pass those savings on to consumers? Is that the business model? Do we see that play out or not necessarily?
Well, the scale is, certainly a factor here. The number of stores that the companies would have, equates to how much presence they have, different banners, and the companies have also been investing in non-retail areas, whether it's e-commerce or advertising or what have you. So, it'll really be interesting to see where this goes.
Okay, so what if they have to go it alone here? What does Kroger do and what do Albertsons do if this doesn't end up working out? What does that look like on the other side?
So, Kroger, I suspect will go back to, what they have been doing, which is, running their operation. It'll be interesting to see if they pursue M&A opportunities down the road, and I think same thing with Albertsons.
Right.
They went public in 2020 after trying a few times in the past, and this is a deal that came out of that strategic review that they started, about 2 years after they went public. So, both of the companies are not, strangers to M&A, and it, will be interesting to see what other deals might be in the future.
Yep, off to the litigation. Now we go. Jaywan, thank you so much. Bloomberg News retail reporter Jaywan Kang joining us from our Chicago bureau. Shares of Kroger, by the way, outperforming the market trend today, up about 2.5%.
Well, shares of Apple now up by 0.3%, reversing an earlier decline. This after a Bloomberg exclusive by our own Mark Gurman that reported that Apple is canceling the car project, its electric car project, and shifting a team to generative AI. We got Mark Gurman right now, Bloomberg News chief technology correspondent, live from our studio in Los Angeles, just moments after publishing this. Mark, a collective wow came out of the newsroom when we saw this story cross here. I mean, this is a project that the company's been working on for a decade at this point. What do we know about Apple's electric car plans?
Yeah, so Apple this morning officially canceled work on a self-driving electric car. Jeff Williams, the company's chief operating officer, and Kevin Lynch, the company's vice president of technology, who was foremost in charge of the car project, announced to the team, it's about 2,000 people, that the project, called Titan internally, is winding down. There will be layoffs of some hardware people. Hardware people will have the opportunity to apply to other teams. Other people working on the project are being shifted to Apple's AI and machine learning division to work on generative AI products, a key future component of the company. There will be some people moved to the Vision Pro as well, with that focus on spatial computing. But this is a bombshell development. This is a very rare retreat for Apple. This is a project that they've invested over $10 billion in. They've worked on it for over 10 years. It's had many fits and starts. It's had many directional changes. About a month ago, we reported that Apple had reached a make or break point for the car project. We reported that the latest incarnation of the project, after several meetings with the company's board of directors, was a new budget around a level 2+ car. That was a downgrade from the original vision of a level 4 or a level 5 fully autonomous vehicle, and they also pushed back and delayed that. Since then, there have been more discussions, and executives made the final decision earlier this month, I'm told, to completely shutter the project. So again, this is Apple canceling work on an electric car. This is a significant development for one of the company's most ambitious attempts at a new product category in its history. So this is a very significant day for the company.
Yeah, very significant. It's not like it's just, an idea on the back of a napkin. I mean, they had been pursuing, as you said, Mark, for over 10 years. The road was rough, though, in Apple's pursuit in terms of bringing a car to market. I mean, this company, for them to step up the amount of time, money, people, effort that they have put into something like this, I don't know. How do you get your head around it? Does it mean just completely done? Does it mean that they could buy into something in the future, or they're just saying this isn't a market for us?
Certainly, there are considerations on the table to acquire an existing car maker. Obviously, you've seen what's happened in the car industry lately. Rivian has not been doing so hot. You've seen other car companies struggling, Lucid being one. Tesla has had its own ups and downs. It's a very, very thin profit margin business. It's not the typical business that Apple likes to get into, but there is some risk in abandoning this project. What if Alphabet, Google, Waymo, Amazon with Zoox, some of these other big technology companies, certainly the Chinese phone makers, they're all getting into cars. What if one of these companies comes up with a great car idea one day and successfully creates a new ecosystem of its own to rival Apple's, and they can risk pulling people away from Apple into a Google car or an Amazon car and getting them on their other products in the ecosystem. So there's certainly some very long-term risk here, but in the short term, this may be a good thing for Apple, being able to focus resources towards perhaps more promising areas in the short term, like spatial computing and generative artificial intelligence.
Well, that's exactly where I wanted to go with you next, Mark. To you, is this more about Apple saying no to a car and less about Apple focusing resources on AI, or is it the other way around here? Is it all about Apple saying, wait a second, the rise in interest in generative AI over the last 18 months has just been massive, and we need to go all in on this such that we need to actually cancel our work on the car in order to do that?
It's certainly not the latter, Tim. This is Apple making a decision to wind down the car project because they weren't getting anywhere. It kept getting delayed. It kept getting more expensive. They have these hundreds and thousands of employees that are brilliant people, and we have places for them. Generative AI is a key area. Let's throw them there. There's a lot of artificial intelligence, machine learning overlap between work on an autonomous vehicle and what needs to be done for the future of AI on phones and watches and earbuds and glasses and such. So it makes sense to reallocate those resources. But don't be mistaken, this is a decision all about canceling the car. They just happen to have an excellent soft landing for the resources that have been invested in the vehicle project.
Okay, so if you're an investor in Apple and you're saying to yourself, I'm a little concerned about the decline in iPhone sales in China. I'm a little concerned about the traditional Apple products being long in the tooth here. I don't necessarily see promise, at least right now, in spatial computing, Mark. What is there on the horizon for these investors to get excited about? Because I think on a lot of minds have been, okay, well, at least Apple's working on a car here, and that'll be out at some point.
Certainly the Vision Pro is something that Apple is focused on. That is a big new category for them. And certainly generative AI, AirPods with cameras is something I wrote about, the eventual debut of augmented reality glasses. There are certainly other things on the roadmap that could be exciting, but nothing that would drive as much immediate revenue as a $100,000 car.
Yeah, talk about it, right? That really moves the needle. It's a whoa moment, as we say, but another exclusive by you, Mark, that's really got everybody kind of rethinking some of what Apple's doing in the future. It's just a really, really big deal. I will say Apple's shares still up about 0.5%, but nonetheless, really interesting when it comes to Apple's strategy. Mark, thanks so much for jumping in and telling us about your exclusive. Of course, Bloomberg News Chief Technology Correspondent Mark Gurman joining us out there from the West Coast.
All right, well, shares of Whirlpool are trading higher today. This is the company that owns the Maytag and KitchenAid brands. Had its annual investor day and shared how it's counting on small appliance businesses to help turn around sales. Whirlpool shares up by 0.6% right now.
All right, so let's talk a little bit about strategy and the business outlook and how the consumer is doing. Let's get to the interview. Great to have back with us Whirlpool Chairman, President, CEO, and COO Mark Bitzer. He's joining us from the New York Stock Exchange, where he presided over the company's investor day. Mark, so good to have you back with us. Hope you are well. Let's start a little bit broadly because we got some U.S. consumer confidence news down in February for the first time in 4 months. Americans' views deteriorating about the outlook for the company, the job market, and financial conditions. What signs of strain and stress are you seeing specifically when it comes to consumers? How would you describe them?
So Carol, first of all, thanks for having me back on your show. Yeah. Let me maybe talk, obviously our purchase like a durable appliance is heavily driven by consumer confidence and housing in general. So what we did see already the last year is that actually our replacement side of a business, where people just replace a product under duress, that has been very strong and even up. But the discretionary side, we actually already last year saw coming down. Large as a result of interest rates rising, housing kind of being very slow and slowing down throughout the year, that ultimately depressed the discretionary side. So what you're describing, we saw already last year, and we probably, in our earnings call also, we said it's probably going to be around us, certainly for Q1 and Q2. And then we need to see what happens with interest and mortgage rates and everything else. But I think there needs to be a catalyst from that side to really lift consumer sentiment.
Well, what would that catalyst be, Mark? Like, what are you looking for at the perch of Whirlpool?
Yeah, in particular for our North American business, which, there's a strong correlation with existing home sales and housing market in general. We shouldn't forget that, the average mortgage rates, which are right now locked in with homeowners, is 3.7%. So I think to really bring supply on the market and getting people ready to sell their existing homes, I think you need to see mortgage rates, certainly below 6%, probably more like 5.5%, to really kind of unfreeze the market again. Because, what we saw the last 2 years is the market pretty much dropped from 6.4 million existing home sales to 3.8. That's a dramatic drop. We call it a shock freeze. And it takes that momentum or the catalyst on the interest rate side to kind of unfreeze or fall the market. And that's what we don't see it short term. And of course, everybody's got to watch what the Fed will do. But I think over time, it will kind of be a key catalyst for growth.
So make that connection for our investor audience about that key catalyst here and why a person who is sitting at a 3.75% mortgage won't necessarily go out and buy a new appliance from Whirlpool. But if they were to sell that home to somebody at a favorable mortgage rate, that person moving in would then buy a new appliance from Whirlpool. Why wouldn't the person who lives there now end up buying it if they actually need a new washer or dryer?
Yeah, so again, if it just needs a new washer and dryer, we would see that as a replacement market. And it's again, if you break down, and let me zoom out a little bit, break down our fundamental demand. Our demand has replacement, has discretionary, and new homes. These are basically our fundamental three demand drivers. Replacement is very strong because of what we've seen post-COVID, and certainly during COVID, people spend more time at home, so the appliance usage is higher. Higher usage rates drive earlier replacement. So that side of business is very strong, and we see that today. But what is right now soft is the discretionary side, which in particular comes with existing home sales. And over many decades, what we typically saw, kind of the month before and the month after people buying a new home or existing home, that's when you have increased purchase and appliance and everything. So because what we typically see with people moving in, one of the first things we might do is replace the kitchen or at least replace the appliances. So that part of the demand is today missing. And again, think about yourself. If you're a homeowner, you're locked in at 3.7 rate. I mean, are you willing to kind of refinance or buy a new home where mortgage rate right now is 6.8 or 6.9%? The chances are low. Okay, that's right now what we see in the market, and you can't blame the consumer for that.
Mark, I feel like you're describing me. You know, we bought a new hot water heater because we had to. We didn't have a choice, right? That was replacement. We thought about maybe purchasing something else new that we didn't need to and discretionary, and we said, you know, we're going to not do it right now. So, like, I totally get what you say is going on. Having said that, then, let's talk a little bit about your investor day and some of what you're doing. Our team writing up how you guys are going to focus are focusing on smaller appliances. It seems to be maybe what consumers are willing to spend money on. The margins are better. Talk to us a little bit about that strategy and how it can move the needle, especially when it comes to top line growth and margin growth.
Yeah. So Carol, what we spoke about is, you know, as a company, we've been in a multi-year, what we call portfolio transformation. And what it basically meant is, over past decades, we've had a fairly dispersed global business. We were from China to Chile, in all places of the world. And what we've decided on the majors business, but we want to focus on the markets where we have an undeniable strong position, which offers the Americas, North America, South America. We have good business in India, and that's what we'll focus on. So over the years, we sold off the majority of our China business. We sold off Russia. And right now, we're just in the kind of final weeks before we can close our European transaction, where we would only have a smaller portion of the business. So with that, we have a fundamentally different business portfolio. One, essentially, it's the major business in the Americas, in India, and we have our small domestic appliance business. That was, in some ways, you could describe it as a hidden gem from the past, because it was hidden in the segment results of all the different regions. But if you look at that, that is probably, it's our strongest brands. It has passion across all demographics and age groups. And we feel we have a license to grow that business, certainly from a consumer perspective. So, and a lot of our resources going forward will go into our small domestic appliance business, because it's certainly one which we love, strong margins, and an exceptionally strong consumer position.
How small, or what percentages is the smaller appliance business, Mark, right now in terms of revenues, and how big do you think it could become if we look at the kind of revenue pie?
Yeah, so today it is quote unquote only a $1 billion business, but it has 50% EBIT margin. So it's a very margin attractive business. But, you know, our presence if you look at the categories of small domestic appliances, it's largely stand mixers and associated products. But we have so much opportunity to grow in coffee, and we just announced today also we will bring a fully automatic espresso maker in May this year. In other parts of business. So we strongly believe there's ample opportunity to grow that business.
Hey, I want to talk a little bit about the cost cutting that you're targeting right now across the different business lines after incurring significant increases back in 2022 and in 2021, Mark. Where within the business are you finding these savings?
Yeah, so first of all, to put it in context, it's, you know, in the COVID years, we basically had more than $2.5 billion of additional costs. That was the big inflation wave, not only raw materials in all parts of the business. Last year, we clawed back 800 million of that, and this year we're targeting over 500 million. So we're not even fully back to pre-COVID cost levels. The opportunities which we see this year, and that's a little bit different from last year, we don't see a lot of tailwinds from raw materials. So we pretty much expect steel and oil and everything else to remain rather stable for us. But we do see opportunity on cost takeout on products. We do see further opportunities to reduce logistic costs, because it's a massive cost element for us, because we're shipping big, bulky products, and that just drive a lot of cost on the logistics side. But we're also looking at our overall overhead and infrastructure. And what I mean with that is, you know, global business required a fairly complex global organization. With a more focus on our Americas, we have an opportunity to radically also simplify how we organize, and that also drives some cost savings.
I do wonder, too, looking at your balance sheet, we have this really great story, a Bloomberg exclusive today. It's among our most read, about how companies who have been so addicted to debt are now seeking equity. So thinking about selling shares rather than tapping the debt markets if they need money. You guys, what's your plan to deleverage your balance sheet specifically, which has grown as you've done some acquisitions? And I do wonder if investors can kind of still count on the dividend going forward, the sustainability of the dividend market. And just got about a minute or so left.
Yes. So let me first start straight away with dividend. We paid our dividend for 69 years, 69. And in none of the 69 years we ever had a dividend reduction. Actually, but out of the last 10 years, in 8 years, we had a dividend increase. So we are.
So that's a yes.
That is it. Well, of course, every single dividend payment requires a board approval, but right. I would say this statement publicly if I don't feel the board feels very strongly about it. So we strongly believe in dividend, and we have a funds to pay the dividend, and more importantly, we have a basic guideline internally where we say, over the last 3 years, we look at the average EPS, and we typically pay out 30-35% of that EPS over the last 3 years, and we're pretty much on track on this one. So more to the balance sheet is, first of all, keep in mind, we have $1.6 billion of cash on hand.
Right.
That's a public number. So what we do want to do, and we knew exactly when we acquired the incinerator business in Wisconsin, which is hugely margin attractive with a strong position. We knew, of course, it's a heavily loaded balance sheet, and we said, we need 2 or 3 years to kind of digest that acquisition-related debt. We paid last year down $500 million. We will pay down this year $500 million. So what we guided today in Investor Day is kind of, by 26, we want to be roughly in a two times net leverage. So we feel we're on the right path, kind of de-risk, if you want to say so, and use the balance sheet to the levels where we want to have it.
So appreciate, covered so much ground as you always do. Mark Bitzer, be well. Look forward to always our next conversation. Chief Executive Officer at Whirlpool, joining us from the New York Stock Exchange.
And let's get to Washington, D.C. now for a check of the latest world and national news. Welcome back, Nancy Lyons.
Thanks, Tim. House Speaker Mike Johnson says congressional leaders had a frank and honest meeting with President Biden today. He sounded positive about avoiding a shutdown with the first deadline this Friday.
We're very optimistic. I hope that the other leaders came out here and told you the same. We believe that we can get to agreement on these issues and prevent a government shutdown, and that's our first responsibility.
As for the supplemental funding bill that provides aid to Ukraine, Israel, and Taiwan, Johnson says the House is pursuing various options on that and will address it in a timely manner. Alabama lawmakers are scrambling for ways to protect in vitro fertilization services after a state Supreme Court ruling that frozen embryos could be considered children under state law. 3 providers paused services. Meanwhile, U.S. Senator Tammy Duckworth is spearheading legislation she says will help protect women and their reproductive rights.
If you truly care about the sanctity of families, if you're genuinely, actually, honestly interested in protecting IVF, then you need to show it by not blocking this bill on the floor tomorrow.
Duckworth says her Family Building Act would ensure every American has a right to become parents via treatments like IVF. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Nancy Lyons. This is Bloomberg.